I don't have control of this collecting back. I'll tell the Mr. Arvind to upload it. Okay. Last
Your
session
voice is
not
bit feeble.
finding.
You please bring your mic to.
Am I audible for all of you?
Yeah. We can hear you, Professor.
Somebody is telling bring mic near to you. Okay, I am perfect now. This is the maximum volume from my side. If anybody finds any difficulty, please let me know. Let me check once again.
Sir, can I ask question now or?
What is the question?
I wanted to ask how much money owner can withdraw from the company? Like more than equity also he can withdraw or?
See, class, understand please this concept. In the previous class, you discussed the different forms of ownership. First, I have to ask you to answer your question. I have to ask you a question. What is that business ownership type? We have discussed 5 forms of business ownership, right? You remember? Single owner, that is sole proprietorship. A business can be formed in any one of the 5 forms. I told you already in the previous class. 5 forms of business ownership is there. That is sole proprietorship. Another one is partnership. Yeah, it is here. Sole proprietorship, then partnership. Okay, 3 they are mentioned here, but actually 5 are there. One is only one owner. He himself contributes money. He employs some employees and he runs the business. Second one, partnership. He himself and his friends or some other known people are joining with him and forming a business. Third one, cooperative form of organization. You might have seen some cooperative societies. Those who are doing a similar business will join together and they register themselves as cooperative form of business organization. Okay, that's another possibility. Fourth possibility is Hindu undivided family. Please don't confuse the family businesses with this term Hindu undivided family. You and your father may be doing a business. It may be a family business, but it cannot be called as Hindu undivided family business. Okay, the family business can be of any of the 4 categories. It can be a company, it can be a sole proprietorship, or it can be a partnership. Okay, Hindu undivided family means ancestral business and properties are there, inherited to you. Okay, and you are doing the business in the name of Hindu undivided family. 2 conditions: the ancestral property and business should be there. It should have not been divided among the co-brothers, and then there should be a Hindu family. Okay, that business ownership is called as Hindu undivided family. Please understand, this is not a family. It's not referring just a family business. Family business not necessarily to be a Hindu undivided family form of ownership. We are talking about ownership. Okay, then fifth category is corporate form of ownership. Joint stock companies, which are registered under Companies Act. Okay, whatever you are seeing today, Reliance Industry Limited, ICICI Bank Limited, whatever the name you are finding, the last term limited, that will come under this category called a corporate form of business organization. Now come to your question. You are asking whether or how much the owner can withdraw money from the business, and you are also asking another further question, up to maximum of equity or not. The question is to be answered based on which form of business organization he belongs to. In corporate form of business organization, he cannot withdraw anything from the company. If you are a shareholder of a company, you are considered to be a owner of that company. You can never withdraw even a single paisa from the company. Only the company is going to give you dividend. If you don't like that company, you cannot go to the company and ask the money back. You can go to the stock market and you can sell your shares, sell your ownership in that company to a third person who is willing to take that ownership. That is happening in the stock exchanges, buying and selling of equity shares. So in that way, you are restricted to take any money from the company. Company is separate. Company ownership is separated from the management. Board of directors will take care. Even if you go there and tell I am the shareholder, nobody cares for you. Okay, you are the shareholder, but you are divorced from the ownership is divorced from the management. Okay, so in that case, we cannot even withdraw even a single paisa. In partnership and sole trading company and into undivided family, you can withdraw. How much ever you want, you can withdraw. It is your business, you can do so. In cooperative form of organization also, you cannot withdraw any single paisa from the business. Okay, that is the thing you have to understand. How you can deal with withdrawal of money, withdrawal of capital introduced by the owner in the business. I hope you are clear now.
Yes, sir. Thank
Okay, let us start with the today's class. Very, very important, very basic concept, that is principles of accounting. Principles of accounting. Okay, principles. If you see your course plan or your course outline, there's a concept called principles of accounting. Okay, what do we mean by principles of accounting? The different concepts, conventions, postulates, and other guidelines and standards which have been evolved and developed over a period of time to guide the accounting profession, to guide the accounting practice, to keep records. How do we identify transactions? How do we process the transactions? What are the books to be maintained? In what form that books to be maintained? What are the rules to be followed? All these things put together, we call it as accounting principles. I say again, please understand, accounting principles are those guiding elements, guiding forces, or rules and regulations which have been developed by the accounting professionals over a period of time for having a uniformity in the practice of accounting. Those guiding elements are called as accounting principles. Those elements can be of concept, conventions, postulates, and principles. Okay, the four are interrelated to each other. One thread which is connecting all these four is the guiding element of accounting practice or profession is concepts or convention or postulates and the principles. But they are having small differences. Concepts are providing the conceptual understanding and guidelines for application of the process of how the accounting records are maintained and how the data in accounting is measured. Suppose you are selling the goods on credit basis, you have to immediately recognize that as a sales, or you have to wait till the money to be received from the customer to recognize that as a sales. That is a measurement. That's a dilemma. You are selling the goods to customer on sale or return basis. There is a company which sells the goods on sale or return basis. They can take the goods from us today. They can keep it for some time. If they satisfy, they will keep it and they will tell, yes sir, we have taken this good for sale. Otherwise, if they are not satisfied, they will come and return it back also. Okay, so there are so many practices are there in the business organizations. How do we deal with that? For that, uniformity is to be brought in. That uniformity is brought in by certain concepts. Such things are called as accounting concepts. Then conventions are practices which have been followed by the accountants on the basis of long-standing customs in the preparation of financial statements. I request all the participants to mute yourself, mute your mic.
सब चल रहा है यार बढ़िया हाँ please mute yourself.
Okay, so any practices which have been developed by the accountant over a period of time in the preparation of financial statements, how the statements should look like, how do I treat individual items, how do I treat individual expenses or income in the preparation of financial report. That is called as convention. Then postulates are nothing but the basic assumptions what an accountant will follow in the preparation of or in the maintaining of books of accounts based on his self-evident truths. Okay, these are established or general truths which do not require any evidence to prove them. Okay, they are propositions taken for granted. Say for example, If I receive cash, it can be deposited into bank. If I receive check, it can be deposited into bank. Nobody will come and tell the check should be deposited into bank, or some rule is there to deposit the check into bank. If you receive a check, definitely it can be encashed only through going to a bank. Okay, otherwise we cannot encash that. Of course, you can endorse that. Endorsing is different, but encashing the check is only through bank. So that is called some general truth, which are called as postulates. Then principles are nothing but some general rules and regulations which are adopted and professed as a guiding element to the broader aspect of practicing of accounting. How do I apply the concepts into practice? That is what we call it as principles. Don't confuse these four. You take it as a single sentence. That is, all these four are certain guiding elements to have a common practices of accounting in a particular environment. That is what we call it as accounting concepts, conventions, postulates, and principles. Now, accounting standards. These four are theoretical. These four are developed by professionals over a period of time. But accounting standards are based on the principles, concepts, conventions, and postulates. But these are developed by a competent authorities. It's a rule. I mean, it's a what you can say, legalized form of your principles standard. Okay. Say for example, I'm just telling the keep left in the road, on the road, keep left. It could be a normal custom or a normal practice. But when it comes to a traffic rule, if government says that through an authority or through a law, then that becomes a rule. So likewise here also, what we were practicing are principles. Taking that principles and imposing on the companies through some accounting bodies are called as accounting standards. So accounting standards are nothing but written statements. It is there in a policy document. It is there in the paper. Written statements issued from time to time by various competent accounting authorities, accounting institutions. Okay, which are there in the country. In our India, we have Institute of Chartered Accountant of India, ICAI, that will take care of issuing of accounting standards. But please don't confuse, accounting standards are not new thing what that ICAI is going to develop. ICAI is going to develop accounting standards based on these four concepts, conventions, postulates, and principles. That becomes a rule. It need to be adhered. Okay, it need to be followed. It becomes legally enforced. Okay. So in that way, you have to understand accounting standards. Of course, again, accounting standards are established, framed, chalked out by different authorities in different countries. Again, the comparison becomes illogical. Indian companies are preparing the financial statements based on Indian accounting standards, which were set by Accounting Standard Board, which was created in 1977. Likewise, other countries, USA has FASB, UK has ASB, Canada has ASC. Like that, each and every country has its own accounting standards created, framed by the respective accounting boards or accounting bodies. Now we are living in a globalized environment. Any person from any country can invest in any of the other countries. Globalized economy. From Europe wants to invest in a company in India. But Indian companies are preparing accounting statements based on Indian accounting standards. Okay. Japan companies are preparing according to their own standards. Of course, the broader logic of accounting remains same for every country, but the minute items are varying from, the treatment of minute items are varying from country to country. Custom of treatment is varying from land to land, one area to another area. So the comparison from one company to another company which is doing good is very much difficult for a person who is in Europe to compare accounting statement of an Indian company and accounting statement of a Japanese company. So that becomes some kind of illogical comparison. So to avoid such illogical comparison, now the world has moved towards international accounting standards. All the companies in the world have to follow a single accounting standards. Okay, in that way we have developed an accounting standard. That accounting standard is called as International Financial Reporting Standards. But even today, USA is not just following these. USA is having their own accounting standards, US accounting standards. Okay, previously, before introducing IFRS, all other countries were preparing their financial statements under their own country's accounting standard. If they go for global access of investors, they will convert their accounting standards into American accounting standards, accounting statements into based on American accounting standards. But now it is not required. All the companies can prepare only based on IFRS. But even today, US is following their own accounting standards. Europe and other nations of the world who have signed the agreement in this IASB, they are following this IFRS. We are also, Indian companies are also following IFRS. So please understand, IFRS are nothing but International Financial Reporting Standards, which were created by, which were just propounded by International Accounting Standard Board to provide a common global language, to provide a common rules and regulations to be followed by all the business entities in the world. Okay, that is what we call it as IFRS. Okay, right. So before we discuss in detail about how do we record the business transactions, we should know the basic concepts and conventions. We just now discussed accounting principles, concepts, conventions, postulates, or even standards, whatever it may be. They are all the guiding element of accounting, how an accountant should practice his profession and how accounting is to be maintained. Okay, for that, the basic aspects are these many only. The very first accounting concept or assumption is business entity concept. This we have discussed without taking this name. Last class, I was arguing that business is separate from businessman. That logic is coming from this concept only, business entity concept. Business is a separate entity. It is distinct from businessman. How and why? What I mean exactly? The businessman brings in money to the business and business receives money from the businessman. It could be any form of business organization, the 5 forms of organization what we discussed before some time. Okay, but the money received should be treated as the money received from the businessman. It is not just a business money. And whenever businessman takes back any money from the business, it needs to be accounted. Whenever he brings in money to the business, it needs to be accounted. So that is the concept of business entity concept. Okay. Then going concern concept. Going concern concept. This concept assumes that, or this concept makes the accountant to follow a principle that business is started not for just closing. The business is there forever. Of course, the business may be closed down once for some reasons in the later days, but accounting does not believe that the business is going to be closed very soon. The very existence of the business is forever. The intention of starting a business is doing the business forever. That is why we are having a concept of giving loan. How the accountant is believing that loan can come back. The accountant is believing that the business is going to be forever, so the loan is to be repaid by the taker of the loan in the later stages. That is what going concern concept. Going concern means the business is to be there for all the time. Okay. I just take your questions little later. There are some questions in the chat box. I'll take it little later. Okay. Then accrual concept. Accrual concept means it recognizes the credit transactions as well. Accrual. Cash concept and accrual concept. Cash basis and accrual basis. Cash means cash and carry. You give money and take goods. Everything is based on the transfer of money. But in accounting or in normal business, it is not possible. Everything is not based on just transfer of money. Cash and carry, there are some businesses, but always all the businesses cannot operate on cash and carry. Okay, I am just operating on buy today and pay later. Okay, that concept is called as accrual. Suppose you are closing your books of accounts on 31st March 2020. You did not give the rent for your office on 31st March. Your landlord, the building owner is asking the rent only on first of every month, first date of every month. Okay, if you started paying your rent on 1st January 2019, I mean 1st April 2019, from there up to 31st March 2020, you might have paid n number of rent, maybe 11 months of rent you might have paid. The last month rent you are going to pay in the next month. At the same time, first month rent, that is 1st April 2019 rent is not of that April month, that is of the previous month, that is March 2019. So these concepts need to be accounted for. You have to recognize the accrual also. Accrual means pending, not yet settled. Okay, I have earned money, I have not received it, or I have utilized the facility but I did not pay it for. That thing is called as accrual concept. So we are following accrual concept of accounting, not just a cash concept of accounting. I tell you another example. Take only one day. You have sold goods for rupees 1 lakh. You bought goods for 50,000. You never spend anything on any other expenses. Only buying of goods and the selling of goods is there. 1 lakh you sold and 50,000 you bought goods. What is your profit now? Please respond in the chat box.
50,000.
50,000 rupees is the profit. Now I am revealing another truth that you sold goods for 1 lakh, but you did not receive money 1 lakh rupee. You received money only 20,000. Remaining 80,000. There's a customer who bought goods from you for billing for rupees 80,000. Did not give the money today. He told I will give you tomorrow. In spite of that, you are recognizing that 1 lakh is the sales and the 50 is the expense. So remaining 50 is the profit. But now in your hand only 20,000 is there. Cash is 20,000 only. But you are recognizing profit is 50,000. Though cash is not received. So this concept is called as accrual concept. The same thing, the spending aspect. You bought goods for 50,000. Not necessarily you would have paid all the 50,000 rupees to the supplier. You might have given only 10,000, but you bought goods for 50,000. Okay, so this concept is called as accrual concept. I tell again, accrual concept refers to the practice of recognizing the transactions even though it does not result in physical transfer of money, cash. Only the promises are exchanged. That also need to be taken into consideration. You enjoyed the benefit, you did not give the money, but you should take that money also as an expense. Another one is you earned the money, you earned it, but you did not receive it in cash. A sales example, you earned, but you did not receive in cash, but you are going to receive. So that is called as accrual concept. Next, money measurement concept, very simple concept. Every transactions which are to be accounted into business to be capable of measuring in terms of money. Sir, I appointed a legal advisor. He is very good. He is a very good lawyer, very great lawyer. But you cannot write anything in the books of accounts unless otherwise you gave any salary. Okay. So money measurement concept advises you, advocates you to write only those transactions which are capable of measuring by money. Okay. Next, dual aspect concept. Okay, before going to dual aspect concept, Krishna Raj is asking, sir, credit note will be considered as accrual. See, it's not considered. Credit note, what is credit note? Credit note is a note which is given to the supplier, which is given, it is given to the customer for reducing his account. See, simple. Forget about debit and credit. In my example, I sold goods worth rupees, billing rupees 80,000 rupees to my customer. I billed a customer for 80,000 rupees. Okay. He did not pay the money. He is going to pay next month. Now, next week is coming. Sir, I have taken goods from you. I bought goods from you, but 5,000 worth of material is just not up to my expectation, up to my specification. Please take it back. Okay, now we are giving a note to him. We are giving a document to that customer stating that we have received from you 5,000 worth of goods which I have sold you and which is not according to your specification. So you can pay only 75,000 to me. This is what the document what I am giving to my customer is called credit note. When you sold goods, you are debiting him. Just word with me. These terms we will discuss later only. Since he raised the concept, I'm telling you. We have made his account debit 80,000. Now we are crediting his account 5,000. The net effect is 75,000 rupees he has to give back. This is what we call it as debit note. But that is not just accrual. It is coming out of accrual. That's all. Okay. Right. Next, dual aspect concept. Very, very important concept. Trial balance we discussed last day. Balance sheet we were just talking about last class. These two are having two sides. The two sides should be tally. Whenever you think about accounting, immediately your mind will come out a word called tallying. The tallying is possible only because of dual aspect concept. What is dual aspect concept? Each and every transaction is considered to be having twofold effect. One is benefit giving effect, and another one is benefit receiving effect. If you pay rent, payment of rent is a transaction. Okay. What the two aspects are there? One is enjoying the land for which you are paying the rent. So money is going out and you enjoy the facility of that particular building. Same thing, interest paid. You have used the money of the bank for which you are paying interest. So each and every transaction in the business will definitely have two aspects. Both aspects are recorded in the or to be recorded in the books of accounts as per dual aspect concept. From this only the debit and credit comes into picture. Okay, one is benefit giving, another one is benefit receiving. For the enjoyment of, for the utilization of a benefit, we are compensating the provider of that benefit. In my example, landlord, rent I am giving, using his building. Another example, money of the bank I am using, for which I am compensating the bank by giving some interest. So both need to be accounted. That is what we call it as dual aspect concept. Since you are recording both, automatically debit and credit is going to be equal. We will discuss that how it is going to be equal later stages by taking some number and preparing trial balance. Okay, next, cost concept. Accounting is advising you, advocating you to record each and every transaction only at the value for which you got it. You should not consider the market value. You should not consider any other value. You have to consider and account it for only the value at which you bought it or you got it. Example, you are buying a piece of land on Bandarketa Road, 1 acre you are buying. Okay, near to Anaikal or Bandarketa, you are buying 1 acre by spending 2 crores. 2 crores, 1 acre you bought it. But the market value of the land is 2.5 crores. But you bought it for 2 crores. You should not write in your books, this market value of the land is 2.5 crores, so I will write it, land account is 2.5 crores. No. How much you bought? For how much you bought? You bought it for 2 crores. So you would write it for 2 crores only. At the same time, it will be lesser than that also. Originally, it is 1.5 crore. Due to the necessity, you paid more and you bought it. That time you try to get 2 crore only, not the 1.5 crore. So the principle is, or the concept is, accounting is always advocating to record every transaction only at the cost for which or on which it is purchased or acquired. Okay, cost concept. Are you
So
getting
just
it?
one question on this. Sorry to
Yeah.
interrupt you.
Yeah,
How does depreciation get handled in cost concept? Because depreciation is something that
Depreciation is not coming under cost concept. We are not, see, depreciation is only a book entry. We are not spending anything to anybody. Okay, but originally we have bought an asset. That asset is being used for many years. So proportionately, each and every year we are reducing that value. So that is not coming under the cost concept. You are not spending anything. Here, cost concept recommends only for those transactions which are really incurred in terms of money or money's worth. Depreciation is based on the capital expenditure concept, capital expenditure. Okay, how much you bought a building, for how much you bought an asset, how many years you are going to use that asset effectively. Asset value divided by number of years of the life of the asset, the resultant amount is called as depreciation. That is going to be recorded. That is not a concept of cost concept. You are not spending anything on that.
okay. Thank you.
Yeah, there is a person asking a question, how market analysis arrived for assessing the cost. How market analysis is arrived for assessing the cost of asset. I'm not getting you.
Yeah, so sir, you mentioned like you bought a land for 2 crores, but the market value is 2.5 crores. So how would someone arrive at that market value?
Okay, you want to ask how the market value is being arrived at.
Yes.
How the market value is arrived at? Anybody? Anybody in the group? It's not from accounting. It's only common sense question.
By the demand of the customers.
Government assessment of that area.
One at a time.
Government assessment at the area.
Government
rate fixed
so
for that
government
area.
guidelines value, no.
Due to development.
It's very simple. Don't think too much. It's very simple. Market
Government
value. Where I can get it from the market. Where is the market? It's a real estate. The nearby land for how much it is sold in the same period is called market value.
Okay, got it.
For land, there is no authentic publication of market value. But if you take any other asset, if you take equity share in the stock market, you can see the market price every day. But real estate is one of the very much unorganized market wherein you cannot correctly discover the market price. Even though the buyer will not tell the correct price, seller will not tell the correct price, but normally the price at which the neighboring piece of land has been sold in the same contemporary period. That's called the market price. Okay. Next. Accounting period concept. See, you are doing a business. Finally, you have to find out the result. Basically, two objectives I told you of accounting. One is finding out the performance of the business, financial performance, profit or loss. Another one is financial position of the business, assets and liabilities. Only these two are the major objectives of accounting. But when should I find it out? Every day or every week or once for all? The business is going to wound up, that time only I have to find out. So there are so many confusions arising in front of the accountant. So accountant himself is deciding a logic that I will consider one year, 12 months is my accounting period. In the 12 months, what was my performance? In the 12 months, what I have done? So accounting period concept is advising us to close the books of accounts or to take stock of the things for 12 months, starting from 1st April to 31st March, or starting from 1st January to 31st December. 12-month period only you have to consider as an accounting period. Okay. Next, legal aspect concept. You cannot illegal nature, which is of not allowed in that particular country. Okay. Legal aspect. Anything what you are recording should be based on the legal documents or legality of the particular thing is, but you are not checking that legality. It is automatically checked in the process. As an accountant, if you get an evidence, you are writing it. That evidence should be of legal evidence. Next, matching concept. Matching concept only gives us the profit. Just before 5 minutes, I asked you, I have bought goods for 50,000 and I have sold it for 1 lakh without incurring any other further expenditure. Then what is my profit? Immediately you all told that it is 50,000 rupees. How did you find it out? You are just matching these two. What is that two? Revenue is being matched with the expenditure. 1 lakh is the revenue in that particular case, sales. 50,000 is the expenditure in that case, purchase. So you are just matching. So matching concept suggests as to match the income with expenditure to find out the result of the business. Okay. The next one, realization concept. Realization concept. Realization concept means any material what you are selling or any material what you are buying, when should you recognize, when should you realize that particular expenditure or a particular income? Okay, I sold goods today, I did not receive money. Should I treat it as a revenue or not? That is what we call it as realization concept. Okay, realization. If you have a definite loss, you can recognize it immediately, but you don't have the definite. Suppose there's a case pending in the court of law. There's a case asking a compensation from the company for 50,000 rupees for a damage or for compensation from the workman, for the workman. Now court will decide the eligibility of receiving the compensation to the employee. But before that, you can create some reserve for that. You can create some provision for that, because you are not sure about that particular aspect of giving compensation or not. But you filed a case against someone else to asking for a compensation. You strongly believe that definitely will get, court will be in favor of you by legal aspects. You are going to get it for sure. But even though you are knowing that you are going to get it for sure, you should not write anything in the books of account till you receive that money. So anticipate your future losses and record it today, but don't anticipate your future income and record it today. That is called a conservatism, or you can call it as realization. Once it is realized only, you have to record it. If it is not realized, you should not record it. Okay, next one is objective evidence concept. Objective evidence means each and every transaction what you are recording in the books of accounts should be based on certain evidence. Should be based on some evidence. Without a document, without a supporting document, accountants are not able to write anything in the books of accounts. In auditing, they will check for the evidences. Suppose you take an example of the Satyam, the the previous name Satyam. Satyam was having a problem. One of such problems, financial fraud, is fake employees' salaries were recorded in the books of accounts. How do you record the salary? Salary is an expense to the company. Cash is to be paid, or check is to be paid, or account transfer to be made. 3 ways. It is expense. What is the evidence for writing salary in the books of accounts? The signature of the employee, or the bank statement, account transfer to that particular employee. That's an evidence. You are simply writing in the books of accounts to show the lesser profit or to misappropriate the cash. Accountant is misappropriating, and the owner himself is misappropriating the cash to show the lesser profit, to avoid the tax. That time, if you write just the salary in the books of accounts, his profit will come down. Yeah, of course, Santosh is telling salary slip is an evidence. Salary slip, acknowledgement. Okay, without that evidence, I cannot write salary in the books of accounts. So likewise, each and every transaction, what you are going to write it in the books of accounts should have a evidence. Objective evidence, look at the word, just not evidence. Objective evidence means undisputed. Subjective means I can change that according to situations, according to interpretation. But objective means clear cut. There won't be any confusion, there won't be any subjectivity in that. Okay, that is called objective evidence concept. Next one, some conventions. Over a period of time, some practices have been developed. One among them is convention of disclosure. Accountant should disclose the principle or the practice what he is following. He cannot just hide the principle and maintain the books of accounts. It should be disclosed. Convention of disclosure. All material facts, all principles what he is following should be disclosed to the public. or to the needy people who are using that accounting information. Then convention of materiality. Materiality means the material fact. 1 minute, I'll just show you another document also here that is shared with you already in your LMS. And many people are telling there is a problem in opening that. I have given the access to everybody. Now you can open it. I was not knowing that before, but later today morning I have given that access. I'll share another document now. Are you able to see another screen? I mean another document now, not the PPT.
Yes.
Yes.
Yeah.
Yes,
Yes, sir.
This I
We are
already
able to.
shared with you. This I already shared with you. The concepts what we are discussing now is there in that. You can just refer for your further reading. See concept of, I mean, what we are discussing now, the prudent, I mean materiality concept. Materiality. Look at the 2.3.2. Materiality principle requires all relatively relevant information should be disclosed. Disclosure and materiality are having interconnectivity. Disclosure concept or disclosure convention advises the accountant to disclose the needed information to the public. Materiality concept or materiality principle or materiality convention tells us to disclose all those important factors. Relevant means material means what? Here material means it's not just a goods. Material means material fact, important vital facts about the company should be disclosed in the financial statement. Suppose there is a case pending against the company, or there is a fine imposed by regulating authority, say for example Securities and Exchange Board of India or any other ministry has imposed a fine for violating some rules and regulations. If so, that need to be disclosed in the financial statements after preparation of the statements. So that is called materiality concept. Okay, materiality. Then another one is consistency. What is consistency? Consistency means there should be a regularity. I can select the rules and regulations depending upon the framework, but I should not change it every now and then. I have to follow. I should have some kind of consistency. You have all right to change your rules and regulations within the framework, within the legal environment, but at the same time, you have to disclose it, and you don't have the right to change the rules and regulations every now and then. Say, for example, depreciation we are talking about. There are so many ways in which you can calculate depreciation. Which method you are following in your business should be disclosed. If you change that method from last year to this year, that is not consistency. At least for some years you have to follow that. Unless otherwise there is a demanding requirement for changing that rule, you should not do that. There should be a consistency. Okay. The last one, convention of conservatism. What is conservatism? Conservatism means prudent. Over foreseeing the losses, but don't foresee the profit. To be conservative approach, to be conservative. Don't recognize income which is not for sure or not received. Okay, but at the same time recognize losses which may occur in the future but not even sure for now. This is what we call it as principle of conservatism or principle of prudence. Okay, example I tell you. Bad debts. See, last year you have seen some customers are not giving the money to you. Some customers are not giving money. I mean, it becomes bad debt. It becomes bad debt. So this year, well in advance, you just recognize some amount. You just allot some amount you foresee some amount, that amount will not come back from the customer, that becomes a bad debt. So you're minusing that money from the profit. If you do so, that is the approach of conservatism, prudence. Okay, you are foreseeing the losses, but not foreseeing the profit. To be safer side, that's it. So these are all the various accounting principles. This we discussed already. Okay, any doubt in this assignment question? And the assignment is, I told you to bring it to the class in your PDF file. And I asked you to upload it a little later. If you have any queries or doubt, we can clarify now before we move on to the next one. Let me ask a question. There is a credit sales. There's a credit sales.
I have a question.
One second. I'll take it up. There is a credit sales for 1 lakh rupee. The cost of the goods is only 80,000 rupees, but you are selling it for 1 lakh rupee. Now, what will change in the accounting equation?
Assets will decrease.
Assets or goods assets will decrease by 80,000.
Okay, goods will decrease by 80,000.
80,000, and the capital will increase by 20,000. The profit
exactly.
will go to
Capital equity will increase by 20,000.
20,000. Credit depends. That again will come as 1 lakh will come as the asset. As a
Debtors.
creditor.
Yeah, customers, debtors. You call them as debtors or trade receivables. Accounts receivables will increase by 1 lakh. Accounts receivable will increase by 1 lakh. Equity will increase by 20,000.
And assets will
inventory will reduce by
80,000. Yeah.
So asset side 80 decreasing, 1 lakh increasing. So net effect is 20,000. The opposite side equity increases by 20,000. So automatically equation remains unaffected. Okay. So let me take some questions from the chat box relating to this accounting equation. Okay, before that, Santosh Hegde is asking, company expensing $20 waste basket in the year it is acquired instead of depreciating it over its useful life of 10 years.
I think he has given an example of.
Okay, all right. Yeah, correct. Yes, that's nice.
So in the activity one, the balance sheet has to mandatorily tally, or what is it?
It has to tally, yeah.
Mandatorily means, what do you mean mandatorily? See, according to doer aspect concept, it should tally. See, simple gentlemen, please understand, all of you. Good question. Look at this slide. What I am showing you, accounting equation. If you write it in a table, that does a balance sheet. That's all. See, assets is equal to liabilities and equity. In one side, you write liabilities and equity. In one side, you write liabilities and equities. Another side, you are typing.
Assets.
That's all. Then it should automatically tell, this side you are listing down all the assets. All the assets you are listing down. This side you are listing down
liabilities and equity.
Yeah, normally it is the other way around. Okay, here you are writing liabilities
and equity.
And equities.
Liability and equity.
And equities. Then if that is the case, there is no concept of mandatory. It is by custom, by practice,
by design.
Automatically it will get tallied. Are you getting me?
Okay.
So balance sheet is nothing but the tabular format of your accounting equation. The tabular format of your accounting equation. It should tally.
Sir, I submitted it via email, I sent it to your email. This assignment last.
You sent? Yeah, I have received 1 or 2 mails submitting the assignment. That is informal only. Formally, you have to submit it in the, LMS only.
Okay, it came yesterday only, so I'll resubmit.
Yeah, no problem. If you have any queries on that, we can discuss now.
Okay.
Because that's a assignment, you have to submit it. For that, I have to allot you mark. Now, up to now, it's okay. If any correction is there, you have to make that corrections and then you have to submit it. Anybody else? You've taken some transaction and you are having a problem in constructing that equation. Suppose I'm telling you lastly you have to construct a balance sheet. No, in that balance sheet, you are giving the tabular format of this accounting equation by mentioning each and every individual item of assets, individual item of liabilities, and individual item of equity.
Sir, I have one doubt.
Yeah.
Sir, if my transaction is rent payable to Kiran, what is my account?
Payable to Kiran is not a transaction.
What, sir?
Rent payable to Kiran is not a transaction.
Means that that office rent is rent payable only, no, for my business.
Rent paid.
No. See, wait, sir. Madam, you are running a business.
Yes, sir.
You have taken the building from Kiran for running your business.
Yeah.
Okay, now it is August 9th. What is the agreement between you and Kiran? When you have to pay the rent?
From the beginning of the month, I have to pay the rent.
No, my question is not from when. My question is when you have to pay the rent. There is a agreement, no? Every 10th or every 1st to 10th or every 5th. Like that, there will be an agreement, right? On which date I have to pay rent?
On every first of the month.
Okay, first date of every month I have to pay the rent. If you paid that rent, that is rent paid. Second also you did not pay, there is nothing. Third also you did not pay, there is nothing. I, an accountant, will not worry whether you pay to Kiran or you are waiting. I worry about how much you paid, for what you paid, that's all. Suppose 1st August, you are supposed to pay rent to the landlord, Mr. Kiran. But 9th August is coming, 9th August is today, till you did not pay. Accountant is not worrying about that. Only Kiran should worry and the manager should worry. If they are worrying and quarreling and getting the rent today, then accountant will get the receipt of rent from Kiran through the businessman or through the manager. He will record the rent. It becomes a transaction. Please understand, transactions are not imaginary. Transactions are not just arbitrary. Transactions are based on evidences. Transactions are just supported by documents. Accountant will not worry about what is happening. Accountant will worry about the documents are there or not. Suppose you are going and giving to accountant a receipt from Kiran, then he will take, sir, rent paid. Okay, rent paid, equity reduced, cash reduced, or if it is through check, bank account reduced.
Sir, rent payable will be treated as in the month end as accrual entry, right? Rent to rent payable.
Yeah, that is accrual, but see here, that's not a transaction. Accrual is occurring based on the accrual concept. When you close your books of accounts, suppose you are calculating today the profit or loss of the company. You are calculating the profit or loss of the company. That time you have to worry how much of this current period is still pending to be payable. That time it becomes accrual. Up to now, that is not a transaction here. Suppose if you take that as a transaction for the last day, 31st March, or when you are closing your books of accounts, that day definitely you have to calculate the payables. That time rent payable comes into picture. Rent payable comes into picture. That time what you do? Equity will reduce. Then what will you do? Rent payable. What's the dual aspect?
Creditors will increase.
The landlord account will emerge as a liability. The landlord account will emerge as a liability and equity will decrease. Asset remains the same. Got it?
Okay, sir. Thank you.
Liability will increase, equity will decrease, asset remains the same. But that is not a normal transaction. Take some transactions are happening in the exchange of money or money is one. Okay. But last date, of course, it should be taken. Otherwise, we cannot calculate the correct profit. Then we are not following accrual concept. Very good. Next.
Sir, this you said balance sheet is nothing but the combination of this A equal to L plus E equations.
No. Please use the word correctly. Balance sheet is a tabular form of the accounting equation.
Tabular form of
accounting equation.
Because in the assignment there is a question that we should write 10
Yeah,
transactions.
for that only somebody was asking before 5 minutes. For that only I was telling, you have to prepare like this. See, you have to prepare like this.
Okay. Okay.
You have to prepare like this account. Equity and then liabilities. This side assets. Say for example, one by one, right? Suppose here accounts payable or something you told me, rent payable. Okay. Then creditors. Creditors means accounts payable. Okay. And then bank loan. Then capital introduced. Capital of the owner. Capital of the owner what he introduced. Okay. This side there may be cash available. There may be bank. There may be land and maybe
machinery.
Okay, maybe furniture.
Land and
debtors or accounts payable. Debtors and accounts payable. Whatever the transaction you have taken into account, that will come. Don't write randomly some number. Then one more column should be there for amount. Okay. Amount you have to write. This side also you have to write the amount, the corresponding amount. Okay. Then if you take a total of this, both sides the total will be one and the same. It will be equal. Suppose it is 1 lakh. This side also it should be 1 lakh. Why it is one same? Because of the dual aspect concept. Each and every transaction we are recording two aspects. One is benefit giving, another one is benefit receiving. That is why it is tallying always.
So salary payable also will be under liability only, right? Sir? Salary paid to the staff. Salary paid to the staff.
Salary paid. See, that's what. Okay, thank you. Let us take some 2-3 minutes to understand this. Salary paid. It is not liability. It is an expense.
That's a P&L item.
Please don't confuse, madam. There are so many people, those who
Payable
do not know about P&L, liability, B&S and all. Okay, wait. See, the thing is, if you paid anything, how it will be a liability? Forget about accounting.
Goodwill.
What is a liability in
Goodwill.
English meaning? Liability means something what we owe to others, what we have to pay, what we have to settle. It's a monetary obligations of one against another is called liability. If that is the case, salary paid is an expense, salary payable is a liability. Once the expense is overdue, that becomes a liability. Okay. Once the expense is paid well in advance, that becomes an asset. See, next month I have to pay 1 lakh rupees salary, but this month itself I am paying to my employees. I still have to receive the benefit from the employee, but I have given the money in advance. So that is salary in advance. Salary paid is an expense. Salary payable is a liability. Salary paid in advance is an asset. Am I clear?
Yes, sir.
Yeah. Likewise, any expenditure for that matter, any expenditure.
Sir, goodwill. Goodwill is not a.
Somebody is telling goodwill. Can you tell what is goodwill? Okay, simply goodwill. You may have a different idea about goodwill, but accounting meaning of goodwill is something different from what you are already knowing. Goodwill means you can say the reputation, the popularity, or the worth of that particular business in a good way, all those things. But in accounting, buying a business by paying more than what it worth for is called as goodwill. Buying an asset, buying a business more than its worth. Suppose there is a running business worth rupees 1 crore. You might have seen so many deals in the business world, so many deals. Facebook was buying WhatsApp and so many other deals, airline companies and mobile network companies. Many mergers, acquisitions are happening. A simple example you take: A company buys B company. B company's worth is only 1 crore, but B company demands to be given 1.1 crore. A company wants B company for some synergy or for some kind of things. That time it gives 1.1 crore. So 10 lakh is 0.1 crore is paid more than the value of the business. That becomes goodwill. because B Limited is strongly believes that, or A Limited also strongly believes that by buying B Limited, by paying more than the asset what it is acquiring, definitely is going to beneficial for, because already there is a business established, customers are established, I can just run the business. For that, I am paying more. That more money is recorded in my business as goodwill. Goodwill can never be purchased separately. Goodwill can be purchased along with a business. Running business, if I buy, I may buy goodwill. Okay, otherwise, no. At the same time, if you see goodwill in the balance sheet of a company, goodwill is an asset. If you see goodwill in the company, that company is working hard to write off the goodwill. I don't want to confuse you much. Keep this much in mind. Goodwill is an asset, intangible asset. It cannot be purchased or it cannot be created on your own unless otherwise you buy a running business. If you buy a running business, you can end up in goodwill. Or if you sell your running business, you can realize some amount for your goodwill. Okay, you cannot just create a goodwill on your own and write in the books of accounts, goodwill, 10 lakh rupees. I am very popular in the market. I am the market leader in the market. So I will write in the balance sheet, goodwill is equal to 1 crore or 10 lakhs. You cannot do so. Okay, so goodwill is an intangible asset, that too intangible of intangibles. You can say you are a good person and you are having a goodwill, but the buyer should accept that you are a good company and you are having more value. So that is called goodwill. That is not the discussion now. Let us keep that apart. When we come to asset, we will discuss that. Somebody raised the hand. I just wanted to ask from him what he wants to know. Can you unmute and talk, or you can just type in? There's a person raised his hand.
Sir, is balance sheet updated on daily basis or it's weekly?
No, not necessarily to be, but in the computerized accounting, it is getting updated every second also. But normally, it should be prepared once in a year to know the financial position of the company. More than that, every day, all other accounts are updated. The content of the balance sheet, the component of balance sheets are getting updated automatically whenever there is a transaction happens. See, we are having the accounting equation now that's getting updated based on each and every transaction. Whenever there's a transaction, the accounting equation is getting updated and that is reflecting in the balance sheet. But the company will not take that as a report every day. They will take report of all the individual items. Suppose I want to know how much is the money to be received from my customer. I take his account, print out, then I will come to know. Okay, but in computerized accounting, you can take a balance sheet also every day, every double day. But it is not so. Once in 3 months, the limited companies have to publish their unaudited balance sheet and the profit and loss account in the newspaper and in their website. For that, they will extract it and they will put it. But once in a year, audited, once in a year, audited balance sheet and profit and loss account should be published in the newspaper as well as in their website compulsorily, listed companies. Yes, madam. Somebody is telling something.
So this rent payable is a addition of all rent payables, or bank loan is the total addition, or
yes.
of total
Yes,
year.
The balance sheet is not for that particular day happening. It is the net result of all those happened in that particular period of time. Balance sheet is on a day. It is as on a day. But all other things are happening whenever there is happening. We are recording. Profit and loss account is for the year. Balance sheet is for that day. Yesterday rent payable may be 1 lakh. Today rent payable may be 80,000 because you paid 20,000.
So when we are preparing this balance sheet, we have to
considering all your transactions, the net result of that all transactions should be resulting in the last accounting equation. That last accounting equation only represented in balance sheet.
Okay, so we can take a period of 1 month and we can prepare a balance sheet for 1 month.
It could be 10 days also, no problem, because I told you only 10 transactions now.
Okay. Yeah.
Day does not matter. Period does not matter, but only the 10 transactions should have been imbibed in that process.
Okay, sir. Thank you.
Okay. All right. So is there any other? I don't think so. Any other doubt in the?
Professor, I have one question.
Yeah, please.
How is the future payable amount become an asset? I'm slightly confused on that concept. future payable amount. For example, the salary that I paid in advance becomes an asset. Right. So I'm confused with the concept as how is a payable amount becoming an asset just because I'm paying it in advance?
Yeah, future you have to pay, but today only you are paying, so that's an asset.
How is that possible? I mean, is that by definition or is there a concept?
Accrual concept.
Okay, fair enough. Thank you.
Yeah. Okay. There is Santosh asking something. Purchase account debit, cash account credit. Sorry, mistake. Inventory account debit. I don't think any relevance to this. We did not see any debit credit still. We'll discuss that the next 10 minutes. Okay, I think Santosh is a accounting student.
Sir, I have one question.
Yeah, please, madam.
Okay, so in our assignment, we have to prepare a balance sheet, right? So with this T form, tabular format is enough, or when we get to see now it is all updated, we have the vertical way of showing up first assets and then liabilities.
Anything is okay. It is only a simple accounting concept, equation concept only. When we come to preparing a balance sheet as such, we will go with the company's balance sheet format. But now you can just prepare in a table of 4 columns. One is for equity and liability, amount of that. Third is assets, and then last one is amount of that.
Okay,
only
fine.
a table. Okay.
Oh, thank you, sir.
Fine. All right. So we will move on. Accounting equation is done. Now we are coming to the very, very important aspect of recording the business transactions. Recording business transactions. I hope you still remember the capital expenditure and revenue expenditure. Capital expenditure is an expenditure which creates fixed asset or which is resulting in buying up some long-term assets to the company. For example, buying up land by HCL is a capital expenditure. Buying up land by Shobha developer is revenue expenditure. Revenue expenditure is one which is occurring every now and then in the day-to-day activity of the business. Capital expenditure is one which is happening once in a while in acquiring some income earning capacity to the business. Income earning capacity. Suppose I want to expand my operation. I want another 1 acre of land. I am buying 1 acre of land and I am constructing a building on that. That is a capital expenditure. After constructing a building on 1 acre of land, I am appointing 100 employees. Payment of salary to that 100 employees in the first month or every month is revenue expenditure. Okay, so you should be having a skill and a capacity of classifying or identifying an expenditure as revenue expenditure and capital expenditure. I repeat again, revenue expenditures are day-to-day expenditure which will result in the operation of the business. For the operations, what is spent, that is revenue expenditure. Example, payment of rent, payment of salary, payment of bonus, purchase of raw material, purchase of any other items to the business. Okay, all these things are revenue expenditure. Capital expenditures are those expenditure which will increase the income earning capacity of the business. The operating capacity of the business will be enhanced. Example, buying of fixed asset, buying of land, buying of building, buying of plant, buying of machinery, buying of furniture, buying of car, buying of motorcycle, all these things. But you should not just go with a blind eye that buying of a car is a capital expenditure. Generally, yes. But who is buying? The company. Who is buying? If a car dealer is buying a car, then that is not a capital expenditure, that is a revenue expenditure. He buys the car to showcase it and sell it. If that is the case, there is a revenue expenditure. If your company buys a car and wants to give that one to your manager, then it becomes capital expenditure. Or there is a taxi tour operating company, they buy car, that becomes capital expenditure. I hope you understand the difference between capital expenditure and the revenue expenditure. At the same time, you take it another way. Yes.
Can you please explain that example of car you said?
See, you are a tour operator. I mean, you are a transport company. You are buying a bus or you are buying a car. Why do you buy a car? Not to sell it again. You are going to use that car for operating your business. So that time it becomes an asset for you, fixed asset for you. So it is a capital expenditure. You will not buy every month two cars newly. You may go for an expansion once in a while, but not every day. So buying a car by a car dealer is revenue expenditure. Buying a car by a tour operating company is fixed asset. That is capital expenditure. Capital, important. Okay. The same thing, you go to the opposite side, capital income and revenue income. What is capital income? By selling your fixed asset, if you get any money, that's called capital income, capital receipt. We don't use the word income there, but we use the word receipt, capital receipt and revenue receipt. Owners giving money to the business is capital receipt. Okay. The debtor, I mean the customer comes to you and gives money to you, or buys goods and gives money to you. That is the revenue receipt. Revenue receipts are those receipts which are happening in a day-to-day activity of the business. Capital receipt is happening in the business once in a while by selling off fixed assets or by creating a long-term liability. Please listen. I'm telling one new word here. Long-term liability. In accounting equation, we already discussed what is liability. Any value which are payable is liability. The payability, the due, the time is within one accounting year, within one accounting period, then that becomes current liability or short-term liability. Short-term. You cannot defer it for years together. On the other hand, there is another liability which originally becomes due in the long run. It is not just immediately to be payable. Say, for example, capital I am taking from the owner. I have not promised him that I will give you tomorrow. It's a long term. He gives the money to the business for using that money in the business for a longer period of time. And I'm going to a bank, I'm taking a loan. For 5 years, I'm taking a loan. That becomes my long-term liability. First of all, it's a liability. I have taken a loan. Loan is a liability. From loan, you get cash. The cash becomes asset. That is why dual aspect concept. Look at the thing. You are receiving cash from a bank 5 lakhs by giving a signature in the loan agreement that you will pay that 5 lakh later. Payable after 5 years becomes a liability. Right now, what you are getting in cash is become asset. But the 5 lakh what you are due to pay after 5 years is a liability, but it is not a current liability. It is a long-term liability. So, capital receipt is nothing but a receipt which is arising out of selling of fixed assets or increase of my long-term liability. Getting loan or getting amount from the owner. That two are the example for long-term liability. So that is becoming capital receipt. Revenue receipts are those receipts which are received from my customer for a day-to-day operations. Selling goods and getting money is a revenue receipt. Getting money from the customer who bought the goods on credit basis from me in the previous period is a revenue receipt. Clear? So revenue receipt and capital receipt. Revenue expenditure and capital expenditure. Now, to find out the profit or loss, what should I do is, I have to compare income and expenditure, but not all the income and all the expenditure, only revenue expenditure with revenue receipt, with revenue income. Day-to-day income will be compared with day-to-day expenditure. That is going to be my profit or loss. Capital expenditure and capital receipt should not be considered for calculating profit or loss. Okay. I think we are giving so much of importance for the basics. We'll just go to the another slide. I mean, the recording of transactions. Recording of transactions. Example, if you want to see here, capital expenditure examples, the cost of assets, which will be written off by depreciation over a period of time. You buy a car, by a company is called capital expenditure. Okay, the amount of depreciation is a revenue expenditure. The car cost is 1 lakh used for 10 years. Every year revenue expenditure is 10,000 or 1 lakh, the 10% of the car. So today the total expenditure what you are spending to buy a car is capital expenditure. This is general rule. But who is buying, that decides whether the expenditure is capital expenditure or revenue expenditure. Any doubt?
One question, sir. See, for car, we can understand the depreciation will be applicable, but you also gave an example for a software company buying a land, right? That's again capital.
Land does not have depreciation. Land will have only appreciation.
Oh.
Land is exempted from depreciation because even if you use the land, it won't depreciate, but building can be depreciated.
Okay.
But at the same time, you will not write it. Every year, a software company bought a land and kept it. I told an example, buying a land and constructing a building, then becomes a land and building that can be depreciated. But just a land is there, you are not using it. You just invested in the land, excess money you had and you invested in the land. But the land value keeps on increasing every year. Year after year, you know very well that is increasing. But for that matter, you cannot come to your accounts and write it. Land value last time it was 1 crore, now it is 1.1 crore. You cannot write it. It remains in the cost only 1 crore. When you are going to sell that land, then the difference between your cost price, what is there in the book, and what you are recognizing in the market becomes the profit. That profit is non-operating profit. Software company's operation is developing software. But excess money it invested in a land 5 years ago, today it is selling, it is getting some profit. That profit, of course, is a profit. Accountant will not deny it's not a profit. But that profit is called as non-operating profit. It is not coming from the regular activity of the business. But it is a profit. We'll discuss that. Okay. Okay, can you say the first one, freight paid on purchase of machinery, is a revenue expenditure or a capital expenditure?
Capital expenditure.
It is a
capital expenditure.
Capital expenditure.
Capital expenditure. Okay. Freight paid on purchase of machinery is
Capital expenditure.
Capital expenditure.
Freight paid on purchase of raw material is
Revenue expenditure.
revenue expenditure.
Revenue.
Okay, this is incidental to capital asset, so it's a capital expenditure. Installing and commissioning charges paid for erecting of a machine, erection of a machine.
Revenue expenditure. Revenue expenditure.
Capital expenditure. Because
Capital.
installation charge paid for erecting a machine on a plant.
Okay, capital. Yeah. Yeah, it's capital. Correcting.
Capital expenditure. Capital expenditure. Built on extension to the factory building.
Capital.
Capital expenditure.
Rebuilt a wall destroyed by storm.
Revenue.
No, this is again capital.
Capital expenditure.
Capital expenditure.
Repair expenses incurred on new machinery before installation.
Revenue.
Revenue.
Revenue expenses. Revenue.
Capital. If
Capital.
it is just
Before
on
installation.
existing machine,
Yeah,
it's a revenue
repair.
expenditure.
Capital.
Correct.
A new machine for you, it's new. From another person you bought as an old one, doing repair and installing it. Capital expenditure.
Capital expenditure.
Heavy expenditure on research and development.
Revenue.
Capital expenditure.
Revenue.
Capital
Revenue.
expenditure.
Capital expenditure.
Sir, this can also be sold as well, right?
You can sell.
Research was
Why do
successful.
you think about future? Now you are heavily spending on research and development. That research and development will result in an innovation of a product. That product can be sold to develop. You can sell that right also. You can sell that pattern. I mean that formula also to somebody. That is true. But now this will not be compared with your normal revenue. If you compare with your research expenditure with the normal revenue, then your revenue will come. I mean your profit will come down, or sometimes it result in loss. This R&D expenditure is not connecting to what you are selling today. So it should be treated as
Capital.
expenditure. Heavy expenditure on R&D of a new product. Okay, that's okay. Heavy marketing expenditure incurred on launching.
Revenue expenditure. Launching a new product is capital.
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 Purchase of second-hand furniture.
Purchase of a motor car.
Capital.
Capital.
Car also is a capital.
Depends on the company, sir.
Capital expenditure.
Capital expenditure. Yeah,
Capital
purchase of car as a
expenditure.
motor. Capital expenditure.
Capital.
Purchase of petrol for the
No,
new
it's revenue. Revenue.
It's a revenue.
Because you're taking petrol.
Petrol is a revenue.
Request that
Revenue.
baby to be quiet, or the caretaker of the baby to make that baby too quiet. Okay. The purchase of petrol for the new car is
Revenue expenditure. Revenue expenditure.
okay. Like that, you have to classify. Okay, now we can go for the journal. Okay, how to prepare a journal. We missed it somewhere in the inside. Now, fair enough, we have some kind of idea, fair idea about the basic concepts of accounting, which may be useful for us to record transactions. Yeah, preparation of journal. Okay, the very basic first step in the record keeping is preparation of journal. Okay, preparation of journal. Look at this. We have discussed this. The transactions are identified by documents. Immediately after identification, that goes to journal or subsidiary books. Now, for time being, we consider the journal. What is journal? Journal is nothing but a book which records the day-to-day transactions in a chronological order, one after another, based on the time of occurrence. That is called a journal. I repeat, journal is a book of prime entry, book of first entry, which is recording the business transactions in a chronological order to have a basic record of all the transactions. It's a first level activity, first level record keeping, bookkeeping. It's called as bookkeeping. This is the format of a journal. I want you to just take a picture. I think, of course, this is there with you, or you can take a note of this. This format is to be remembered by you. It can be asked in assignment or it can be asked in specimen of a journal. It's a book, normal book. The book page is ruled like this: date column, particulars column, LF column. What is LF column? Ledger folio number column. Ledger folio number. The transaction which is recorded in journal will be going to ledger as well. In which page this particular transaction is recorded in ledger, that page number is to be recorded in the third column. But academically, we don't know. We cannot write that. So we just leave it as blank. Ledger folio number. Ledger folio number. Okay. Yeah. Then amount. Debit amount, credit amount. Okay. Where from this debit and credit comes into picture? You remember when we were discussing about the dual aspect concept? I was telling you each and every transaction is having two aspects. Both aspects are recorded. For recording, we have some rules and regulations. We call them as double entry bookkeeping. Double entry bookkeeping or golden rules of accounting. What is that? You remember in the last class I was telling you it was invented by a person called Luca Pacioli in Italy in 14th century. He comes out with some rule. Still we follow that. Still we follow that. What is that? Okay. The rule I'll tell you here. I'll check whether it is written or not. Otherwise, yeah, it is there. Okay. So double entry means recording both the aspects of a particular transaction is double entry bookkeeping. Okay. In the double entry bookkeeping, he is telling a rule. That rule is based on the classification of accounts. What is account? The financial relationship between two individuals or one individual to an entity or between two entities are called as account. You simply go to a cafeteria and you take some items and you will say, sir, please keep it in my account. From that moment onwards, the financial relationship between you and the cafeteria owner is starting. Likewise, the accounts are nothing but financial relationship between two individuals or between one individual to another entity or between two entities. Such relationship can be classified into two categories. One is personal account, another one is impersonal account. Personal account deals with, or personal account refers to those natural and artificial persons. Suppose I am giving money to you. So we both are individuals. So it's coming under personal account. I am giving money to my bank. I am depositing money into bank or withdrawing money from the bank. Bank is an artificial person. Please understand. Bank is a business organization. According to this concept, person means a natural person or artificial person. Any account which connects a natural person or an artificial person or a combination of these two will be termed as personal account. Example, rent payable is a personal account. Loan account is a personal account. Loan payable. Okay. Debtor is a personal account. Creditor is a personal account. Okay. We'll discuss more in detail in the next slide. Next one is impersonal account. Other than natural and artificial persons, all other things are impersonal account. So we divide impersonal account into two. One is real account, another one is nominal account. Real account means anything which can be seen, which can be touched, which can be realized that there is a thing. Example, cash. You can see the cash, you can touch. Okay, cash, building, land, motor car, all assets, what you call fixed assets, all are real assets. It is really there. If I say building account, you can see the building. If I say land account, land will be there. Then on the other hand, opposite to that, nominal account. Nominal account means any account which is just created by us. Nomenclature is given by the accountant. He himself is naming that particular transaction into one account as nominal account. Okay. Rent account is a nominal account. How rent is nominal? Can you say what is rent? Rent is nothing but amount payable to the owner of the land. That's it. 5,000 you are giving to the owner. 5,000 you are giving to bank. Bank you are giving 5,000, that is called interest. The first 5,000 what you gave to your owner is called rent. So in that way you only give names. If you give amount to landlord, it becomes rent. If you give the amount to your employee, it becomes salary. If you give amount to your labor, it becomes wages. If you give money to the bank, it becomes interest. So in this category, we accountant classify certain expenditure into some names. Those accounts are called as nominal account. Now,
so where does rent receivable come under, sir? Then
rent receivable come under real account. I mean personal account. Rent receivable, personal account. Rent payable, personal account. Okay. It relates to a person. Rent paid is nominal account. Rent payable is personal account. Cash is real account. Cash, building, land, all those things. Over a period of time, you'll understand a little more better. Now, to record business transactions in the journal, we have to follow these rules of these three accounts. Okay. So I told you, personal account deals with natural persons and artificial persons or representative persons. Representative person only that rent payable and salary payable all comes under. Okay. Representative person. Then real account includes tangible and intangible assets. Nominal account includes rent paid, salary paid, commission paid, interest paid or received. Now, rules for accounting. I have shown you the journal book in the previous slide. We were seeing the journal. You remember? We were seeing the journal, the format of journal. To prepare this journal, we have to follow the rule. That rule only we are studying now. Okay. Three accounts are there in a narrower sense. One is personal account, another one is real account, another one is nominal account. Though real and nominal comes under the impersonal, they are two different, real and nominal. Personal account rule says that debit the receiver, credit the giver. What do you mean by debit the receiver and credit the giver? We have ledger, I mean journal. In the journal, we have two columns. You see, debit column and the credit column. Last two columns, debit and credit. So what I am going to write it in debit, what I am going to write it in credit. That is being decided by this rule. This rule. Okay. I make some more clarity here. You just replied for a question, how much was my profit if I buy goods for 50,000 and sold it for 1 lakh? Immediately you replied 1 lakh, I mean 50,000. That is easy. One transaction was there, you just minused 50,000 from 1 lakh, expenditure is minused from income, you arrived at a profit. But in a day-to-day activity of a business, numerous number of transactions will be there. So I may not be knowing about how much is the total. For that reason, I have to keep books of accounts. For that, journal is the first level. Okay. Journal gives me the recording of transactions when and wherever it happens. I just write it. I don't worry about what is the result of that. I just write it. For that, I have to follow this rule. For the rule, if the transaction is of personal account, I have to follow the rule debit the receiver and credit the giver. Suppose you paid rupees 20,000 to the bank, paid into bank rupees 20,000. Bank is a personal account. What you are paying? Cash. Cash is real account. So please remember the combination of one and another may be there in the transaction, or one transaction may be of only one rule based. Now my example is payment of 20,000 rupees into bank account of my own, my business, taking money from my business, going to my bank account and depositing into my business bank account. That's all. In this case, cash is involved and the bank is involved. Bank is a personal account. How bank is a personal account? Bank is a artificial person. Look at this. Bank is a artificial person. Okay. So it's a personal account. Okay. Then cash. What is cash? Cash is real account. How it is real account? I can see cash. Cash is actually there. So now I have to take a combination of personal account as well as real account, and I have to make a journal entry. I have to make a journal entry. That is, who is receiving? Bank is receiving. So bank account debit. What is going out? Cash is going out. Look at the real account rule. Debit what comes in, credit what goes out. What is going out? Cash is going out. So bank account debit to cash. Bank account debit to cash. I have to write it here. Bank account debit to cash. I just show you how do I write. I write the date here. I write the date. Today's date I will write it here. Okay. 9/8/2020. I will write it here. Then name of the account. What account is now? Bank account. Bank account debit. For debit, I just write DR. Bank account debtor. When I'm pronouncing it, I have to say bank account debtor. Then what is to be credited? As per the rule, credit what goes out. So cash is going out. So I write it cash account. The amount, how much I deposited into bank? 20,000. I write it here. Here also 20,000. Please understand, you are paying only 120,000, but you are writing 2 times. Not in the same name, in 2 different names. Cash is reduced from your cash balance. Bank balance is increasing in your passbook, in your bank account. So 20,000. So debit, the receiver. Credit, what goes out. The combination of these 2.
Sir, in normal day, we see credit as increase in the account.
Yeah. In your passbook, when you deposit money, you will get a message. Your bank account is credited. Am I right?
Correct.
Yeah, that's what you're asking. Your bank account is credited. Here also, bank account is credited. Not in your book, in the bank passbook, your name will be credited. Suppose if it is a bank, I'm just trying to take out the PPT. Yeah, suppose it is a bank Now,
So bank will follow the personal rule.
one second. Yeah. Yeah. If it is a bank, suppose this journal is for a bank. The journal is for the bank where you deposited money. What they will do? What is from their perspective? They are receiving cash. So debit what comes in? Cash account debit. Cash account debit. And credit the giver. Who is giving? Suppose you are giving. Suppose my name, Muthu account, credit, or your company name. And company account, credit. So for this transaction, they are sending SMS to you. They are sending SMS to you. So what they will do? Dear customer, your account is credited with 20,000 rupees. So in that way, they are telling you the message. If you want to tell a message to the bank, you have to say, hello bank, your account is debited with 20,000. Meaning, you have given the money to him at any point in time, you will get back that money. That is why it is debited. He is becoming your creditor now. He is becoming your creditor. At any point in time in future, if you go with a check or if you go with the ATM, you are caught, you have to take back your money from the ATM or bank. That is why. Okay. So in that way, it is told as credited. I mean, your account is credited. Look at the word. Your account is credited. Not bank account is credited. Your account, your account in the bank is credited. At the same time, in your book, the name of the bank account is debited. All right. So again, come to the rule.
Sir, one question, sir.
Yeah, please.
See, I have seen in a lot of cases, the bank is looked at as a real account and not as a personal account. I mean, specifically, like, when I am making payments out of my bank, I hold it or I treat it as good as my cash. Only thing is, it is cash from bank, which is going rather than cash from my own, coffers or from my own box. So there is this confusion. I mean, like, I have always looked at it as a real account. So is there a different way of looking at it today or?
Yeah, see, strictly speaking, as per the rule, it is a personal account only. Bank is a person, artificial person, it's a personal account. But if we treat that, since it is involving with the asset, see, normally speaking, bank is your debtor. Will you agree it or not? Forget about the accounting. From somebody you have to receive money means they are your debtors. Will you agree this statement?
Yeah, so if, okay.
Okay.
That is if I'm investing.
Once again, I have given a loan to you, 1 lakh rupees I have given you. You are my debtor now. Same logic, I have given 1 lakh rupees to the bank. Telling that keep it with you. Whenever I ask, you have to give back to me. That's what bank and customer relationship. So by that way, bank is a personal account. But bank is becoming, debtor is becoming an asset to me. Debtor is an asset. In that way, you are classifying bank into a real account. But classifying bank into real account is by principle, it is wrong. But eventually, it won't disturb your results because both are coming under asset. If you classify bank as a person, if you classify bank as a real account, both are assets. In that way, it won't affect your results. So in your company, you are classifying the bank into a real account. But normally speaking, real account is not something which is really can be touched, can be seen. Building is a real account. Car is a real account. Furniture is a real account. Even stock is a real account. Stock, inventory is a real account. But in general, you have to classify bank into a personal account. But it won't affect the result of accounting, financial position or profit and loss, even if you classify them into real account because it's of an asset for us. Okay, in that way, your company might have classified it into real account.
Yeah, sir, when we started types of account, so that is actually confusing. You gave a personal account and in-personal account, and you gave the example like I'm giving money to another person, and for in-personal, you said I'm depositing money to bank, and now it is coming under
impersonal. If I'm paying money into bank is different. Giving money to the bank in the name of interest is different. Here I am depositing into my bank. Into my account I am depositing. in this example, I am depositing 20,000 rupees into my account. I am not giving to the bank for interest. If I pay 20,000 rupees to the bank by saying that this is the interest for the loan what I borrow, if that is the case, that 20,000 rupees is nominal account. That becomes interest. If we pay for some reason with some expenditure, that is a nominal account. If you pay to the bank for getting it back later, that becomes personal account. Okay. Yeah. So you keep remembering this rule.
Sir, personal account is normally a bank account?
Not necessarily to be only bank account. What is your name?
Sanjot.
Huh?
Sanjot Kadu.
Okay. Sanjot is a personal account. Suppose I am giving, bank is giving money to you, or my company is giving money to you. Okay. That time your name is becoming personal account. But for which purpose I am giving? Suppose you are an employee in the company. That time the company is paying you money. That time you are not important. For which the purpose for which the money is given to you is important. If it is given for salary, that becomes nominal account. The purpose for which the transaction takes place, that decides whether it is personal or real or nominal. If I write your name into my book by giving you salary, then that entry is wrong. I have to consider 20,000 rupees paid to Mr. Sanjay, okay, for salary. If so, I should not write Sanjay account debit. I should ignore Sanjay. I have to write salary account debit. Because I will not get back the money from you. You rendered service to the company, for that I am remunerating you. Okay. If that is the case, that should be treated as salary, and salary is a nominal account. Suppose I am giving you money on account, which I will get back from you later, or I am giving you money which I have taken from you earlier days. I am settling my account to you. That case, that's become personal account. Personal account is for settlement or for future settlement. Nominal account is remunerating somebody or giving for some purpose. We create one name for that. For Sanjay, if I give, I call it as salary, because you are my employee. If I give to Kamal, who is the owner of my business, owner of my building, I call it as rent. That time I don't consider Kamal account debit. I debit rent account debit, because rent is a expenditure. Expenditure is a nominal account. Don't worry, while we discussing one or two transactions, you will be better understanding, but you should be knowing about this rule. This rule is very basic. If I say the logic behind it, you will be laughing at me. If you just record all the rent in one book, whenever you pay rent, just don't write any account, don't follow any rule. You take a book, on the top you write RENT, rent, underline. Date wise you are writing whenever rent paid. You are writing the date and amount paid. Just totaling that rent in the year end, you will come to know how much rent paid. Am I clear? Without following any rule, you take a sheet of paper. Every time whenever you pay rent, you write it in a sheet of paper. That paper is called rent paper. Okay, that paper is taking care of rent. Doing that is very difficult in a business. That is why they are following this rule. Finally, at the end of the year, you should know how much amount I paid as rent, how much amount I paid as salary, how much amount I paid as bonus or wages. For that purpose, the journal is helping us. Yes, somebody is asking question.
I was just trying to understand this nominal account.
Yeah.
So nowadays we are giving fund to Prime Minister's fund. So that becomes nominal because there is a purpose.
One second. You are paying some amount
to relief
PM
fund.
PM cash.
Yeah, some relief fund, suppose.
Okay.
So that becomes a nominal account because purpose
which
is important.
Becomes nominal account. You are paying 1 lakh rupee to Prime Minister relief fund, drought relief fund. Okay.
Yes.
You are a business house. Your business is paying 1 lakh rupee to Prime Minister drought relief fund. Now, 1 lakh cash goes out of you. Am I right?
Yes.
Yes. Hard cash, or of course it's a check through bank, it is going out. And another one is somebody is receiving the money. The Prime Minister Drought Relief Fund is receiving the money. That's a Drought Relief Fund is an account releasing money. Okay, that is donation you are giving. Am I right?
Yes.
Will you get back the money? No. Once for all, you are just giving that money to the Prime Minister Drought Relief Fund. Okay, so that is becoming nominal account. Donation. You are writing donation. If you write Prime Minister Drought Relief Fund account debit, means you are considering that 1 lakh today what you are giving is going to be coming back to you. If you debit that name of the fund account in your book, you supposed to have an idea that you are going to get back that money from him later stage. But it is not so really. You are giving as a donation. So what you have to write? Donation account debit or donation to Prime Minister Drought Relief Fund account debit to bank account. Because from bank, on behalf of you, the bank is releasing the money from your bank account, or you are giving cash. Of course, they won't accept cash. So I'm taking an example of bank account coming down from your bank balance. It is coming down. 1 lakh rupee comes down. So bank is a personal account. Donation is a nominal account. Look at the nominal account rule in this slide. Nominal account rule says debit all expenses and losses. Actually speaking, this 1 lakh is either loss or expense for you. You are giving away once for all. So debit all expenses and losses. The name of the loss or name of the expense is donation. Donation account debit. According to nominal account, donation account debit to the other side. Credit the giver. Who is giving the money? Bank is giving the money on behalf of you. So credit the giver to bank account. That is why I'm classifying bank as a personal account. I want to ask that other gentleman who was classifying the bank as a real account that time, credit what goes out. He is considering the bank as a asset. Bank is not going out. From the bank, cash is going out. So he is crediting what goes out. Instead of cash, he is crediting bank account. But if we consider personal account as a bank, it's perfectly matching. Credit the giver. Donation account debit to bank account. If you give in cash, donation account debit to cash. How it is to cash? Cash is a real account. It is going out of you. So to cash. Got it, sir?
Yes,
Prime
but
Minister of cash is okay?
yes, sir. But I think
Please,
some
you
more.
can tell your point. No problem.
No, I
tell
mean,
your thinking. Yeah.
I think we'll have to probably go through a couple of more examples for each of
Definitely, that's what the next agenda is. No, after this, there is a question. You see,
and the
definitely we will take. That
journal.
is our 10-mark question. No, see, look at this.
Journal also need to be understood once again. It is bit confusing.
Definitely, it will be confusing. If it is not confusing, then you are not understanding. That is good. So it should confuse because first time you are listening all these things. In practice, what we have in normal life slightly different from this rule. As that girl was rightly telling, bank will send a statement that your account is credited. Exactly. Okay.
Sir, shall we take a 10 minutes break?
10 minutes break. Okay. We'll come back by 3:30, 3:32. Then we'll practice a journal. Okay. Thank you.
Okay.
Thank you, sir.
Thank you, sir.
Akib, can you please mute yourself?
Hi, can we resume? All of you are there. Can we restart?
Yes, sir.
Yes, sir.
Yes, sir.
Yes, sir.
We can do so. The questions Manjula is asking, submission date is 15. Is it a gradable one? Yes, it is gradable one. And there is one question from, I'm sorry, many people have asked for a break before, but I cannot see that. Should we do all the items from PDF for only 20 transaction? Last date is 15th August. Please update on this, sir. From Manjula again. See, 20 transaction is more. I mean, transactions are okay, but all means what? It's only accounting equation. I would return that in a detailed manner. That's all. Only thing is you have to take that many transactions and you have to do. If it is mentioned 20 transactions, you have to do 20, and you have to finish it by next week, 15th August. Okay, that looks like an elaborate assignment, but it's not so. It's only an accounting equation. Okay, that's all. Okay, come back to this journal, and if you look at this journal, it has one more sentence here: narration or explanation. So what you would write it here is you have to write a small, brief explanation. Look at the word small, brief, and explanation. It should be brief enough. At the same time, it should explain what that entry is for. We call this as an entry. This is called entry. This is called entry. Okay, this is fully called as journal. Okay, so what is this for? We have to write a small explanation here. That is what we call it as narration. In cash deposited into
The bank.
being cash deposited into bank.
Sorry to disturb in between. Akib, can you please go on mute? There's a lot of disturbance.
Yeah, please, those who are not talking, not talking to the class, to me, please mute yourself, mute your mic. Whenever there is a need, you can just put it in chat box, or you can raise your hand and you can talk. Yeah, that's fine. All right, so this is what we call it as narration. Narration is a small statement in this type, being cash deposited to bank.
Sir, you can make a mute to all participants. That will be
Yeah,
better.
yeah. So if you have only one debit and only one credit, that is called simple entry. Simple. Only one debit and only one credit is there. That is called simple entry. If you have in same only one entry, if you have more than one debit and more than one credit, then it is called compound entries. Compound entries. It's not a big deal. It's a simple thing. Okay. Instead of passing two entries, you are combining the same two entries into one, because that credit is common and there are many debits. Okay, look for this example. There is a owner, he is starting a business. Okay, starting a business by investing cash and bringing his motor car and bringing his furniture into business. The owner is starting a business by bringing cash and by bringing motor car and by bringing furniture also.
There's a lot of background noise. Can you mute?
I have muted all.
There is some background noise from Akib.
I have muted all. There are somebody unmuted.
Akib is the person who is actually having some disturbance. Maybe he's not in yet. So you can search Akib. AQEEB. Akib.
Yeah. I have once again muted him. Let us see
Yeah.
if he is again unmuting and disturbing. We can mute.
He's on mute now. Yeah, go ahead, sir.
Okay. So compound entries are those entries which are having either more debits, more than one debits, or more than one credits. Now, an example: there's a person, he brings 3 items to start a business. So business is receiving 3 items. One is cash, hard cash. Another one is motor car, and another one is furniture. These three is bringing in. So the entry will be, actually the entry will be cash account debit to capital account, motor car account debit to capital account, furniture account debit to capital account. With the respective amount what he is bringing in. Instead of passing three entries, we are passing only one entry, that is cash account debit, the amount for which he is bringing, motor car account debit, the value of motor car, furniture account debit, the value of furniture. To capital, the total of the three. Are you getting it? Instead of passing three entries, we are passing only one entry, since the common credit is there. Common credit is cash account debit to capital. Capital is credited. Motor car account debit to capital. Again, capital is credit. Furniture account debit to capital. In this also, capital is credit. Instead of doing three entries, we are doing only one entry. In that, we are passing all the three debits and only one credit. The amount of the credit is the total of all the three debits.
Yeah, so here it should have been 1,70,000 under debit amount.
Just one second. Just one second. Now in this case, three items are there. So there is the entry should be how much our is bringing cash, say for example 1 lakh, 1 lakh, then motor car maybe of 50,000, 60,000. Okay. If that is the case, total is 1,70,000. Total is 1,70,000. Okay, the alignment problem is there. Cash is 1 lakh, motor is 60,000, furniture is 10,000. The total amount what he is contributing to the business is 1,70,000. What should you write? The narration is going to be being business started. Being business started with cash, motor car and furniture. With cash, motor car and furniture. Like this you have to make. What rule I followed here? You have to talk from the business perspective, not the owner's perspective. The business is making a journal, not the owner. Owner can have his own journal entry separate. That is not we are not talking about. We are talking about the business journal entry. So the business is receiving three items from the owner. One is cash, another one is motor car, another one is furniture. All the three are real account. Please understand. All these three are coming in. These are real account. What is the rule says? Real account rule says. Real account rule says that
debit whatever comes in, credit
what comes in, credit what goes out. Don't look for the owner. So for owner, three items are going out. Yes, real true. When he looks for his own personal journal, he will look for that rule. But for the business, only it is coming in. Nothing is going out from the business. Okay, then what is the another aspect in this transaction? In this transaction, somebody is giving to the business. Somebody is giving. Who is giving? The owner is giving. Owner is a personal account. So personal account rule says credit the giver. Who is giving? The owner is giving. To distinct from the giving of owner and the giving of third party, we call it is capital account. Suppose there are two owners are there. Two owners. That time we need the name. Suppose the business is started by two owners. That time I will not just write capital. I will write whose capital it is. I will write Raju's capital account. Raju's capital account. And another person, suppose another person has contributed a cash of rupees 1 lakh. Then again Ravi's capital account. Ravi's capital account. If he has contributed another 1 lakh, then I will write Ravi's capital account 1 lakh. Then cash account will become 2 lakhs. Ravi contributed 1 lakh. Raju contributed 1 lakh. Okay, it becomes 2 lakhs cash. And Raju has given only the motor car and furniture. Ravi did not give any motor car and furniture. Okay, that's what Ravi account stands at only 1 lakh. Raju account stands at 1,70,000. So debit what comes in, credit the given. These two rule has been applied here in this particular transaction. Okay, this is what journal. Now let us see one by one some journal. What is the transaction for this journal? You can tell me. This is a journal entry, right? For which transaction this journal entry would have been made?
Furniture purchased for cash.
Purchase of furniture.
For cash. Purchase of furniture. Bought furniture for cash. That is why it is written here. Furniture bought for cash. Here you have to be very careful about the capital expenditure and own expenditure. If the company is a furniture selling company, you should not write furniture account debit. Please understand, if this company is selling furniture, that time if the company buys furniture, you should not write furniture account debit. That time you would write goods account debit or inventory account debit. Because furniture is bought not for keeping in the business, but for showcasing it and selling it immediately. For the sales purpose, it was purchased. Now it is an asset. So it is debited. Debit what comes in. Furniture has come in. So furniture account debit. Credit what goes out. What has gone out? Cash has gone out. So to cash. Suppose you bought this furniture for payment of a check that time. Furniture account debit to
check.
Check means what? Check
Bank
is not an
account.
account. Yeah, bank is going to pay on behalf of you. You are paying to the furniture company in check. The check is going to be deposited in his bank account. That will come to your bank for collection. Then your bank will release the money from your account. So your bank account is going to get reduced. So you would write to bank account. The rule is credit the giver. The bank is giving the money. Suppose you did not give either check nor cash. You just told a promise, sir, I will pay you next month. If that is the case,
the name of the person will be mentioned
Accounts
because
payable
the
will
person who
credit.
has given the furniture. Suppose Fatima Furniture Limited. So furniture account debit 15,000 to Fatima Furniture Limited account credit 15,000. So by this time you would have noted I am not writing credit here. Look at this. I am not writing anywhere credit, but amount I am writing in credit side. While pronouncing, while reading it, I would read like this: furniture account debit or furniture account debtor to cash account. That's all. The two means it is the credit side. Okay. What for it is debited? It is debited for furniture. What for it is credited? It is credited to cash account. So this is how you have to make journal entries. Now let us go with some of the examples for the journal entry. Preparation of journal, practical problems. Look at this. There is a transaction. Journalize the transactions in the books of Sumit. Sumit is a trader. Sumit is a trader. Sole trading company. Okay. 2020 January 1st, Sumit started business with cash rupees 1 lakh. What should be the two account affected in this? Please, again, I'm reminding you, from the business perspective, you have to look at it.
Cash and
Business
Sumit
is receiving cash 1 lakh rupee from Mr. Sumit, who is the owner of the business. That's
capital account debtor. Cash
Okay.
account debtor to Sumit's capital account.
Capital account debit to
Cash account debtor to Sumit's
somebody told capital account debit, no? So it's not wrong. It's not correct. The capital account should not be debited. When so you can go with this rule. After some time, when you practice this, you can create your own custom. I mean, your own simple understanding without even referring a rule. Simple rule: capital account will never be debited. Capital account is always credited. Only when capital account is debited means when Sumit takes back the money from the business. That time capital account will get debited. So cash comes in.
Cash account debtor to
Yeah, cash account.
To Sumit's capital account.
Yeah, date you are
Sir.
writing 2020 January 1st. Cash account debit to Sumit's capital account.
Sumit capital.
Being business started with cash. Or only one owner is there. No need of writing Sumit's name. You can simply write two capital account. Okay. Amount 1 lakh. Whenever business is started by introducing cash, cash account debit, capital account credit. Okay. Now next, second transaction. Paid into bank rupees 60,000. This is what we discussed in the
Bank account.
Bank account
What
debtor
is-
to
what are
cash
the
account.
1 minute. What are the two account affected here?
Bank and cash.
Bank and
Bank
cash.
and cash. This is what heads of account. Last class somebody was asking, heads of account. The accountant is naming the head of the account. So the entry is bank account debit to cash 60,000 rupees. We have opened a bank account. Smith business is opening a bank account. Okay, bank account debit to cash. Whenever you withdraw money, just the reverse of this will happen. Cash to bank. Cash account debit to bank. Whenever you deposit, bank to cash. Suppose directly there's a customer, Sunil is your customer, who bought goods from you last month, and this month he is depositing money directly into your account from his place itself. That time what is the entry?
Sir, I can't understand, sir.
What will happen to your bank? Your bank will receive. Bank will not tell, no, Sunil, we cannot deposit the money into Sunit's account. Anybody can deposit money into anybody else's account. Okay, so bank balance will increase. So bank account debit to who is giving the money?
Sunil.
Sunil is giving the money. So to Sunil account, like that. Okay, third one. Third one is bought goods from Mohan on credit. You are a trader. You are buying some commodities for selling from Mohan on credit. What do you mean by on credit or on account? Without
The Mohan account debtor to
No, purchase
bank
account
account.
debtor to Mohan account.
Purchase account.
Purchase
debtor.
account
Actually, it
debtor
is
to
one second. Actually, it is goods account debit to Mohan account. Normally, what is coming in? Goods are coming in. Goods are real account, but we treat here as nominal account. That goods are coming here not for keeping in your company, but for selling it. So we call that as purchase. Purchase account is a nominal account. We only call that as purchase. Please understand, anything what you buy for the purpose of selling, intention of selling is purchase account. Anything what you buy for the purpose of keeping it in your business is asset. That is why in the previous case we debited furniture. Here we are debiting purchase account. So purchase account debit to Mohan account, the amount being goods purchased on credit. These goods can be even land, building, it could be computer, it could be furniture, it could be anything. That is based on what is the business of Smith. For that only I told you in your assignment, describe about your business. If you describe your business, I can slightly understand whether that business is having the relationship with this transaction or not. You cannot randomly take a transaction. Okay, you have to take a transaction based on the nature of business, what business you are doing. Okay. Next, 4th January or next date. 4th January, purchased furniture and computer for rupees 2,000 and 20,000 respectively.
Furniture account debtor, computer account debtor to cash account.
Okay.
cash or bank
Right
account.
entry.
Actually, it is not
There is
mentioned
no
cash or
mentioning
bank.
here whether it is for cash or bank or credit. If nothing is mentioned, you just take it as a cash
Sure,
purchase. But you should not give importance for the word purchase here because these two are the assets. Sumit is not buying furniture and computer for the purpose of selling. It is not merchandise. It is not a company of selling furniture and computer. It's a company of selling of something else, maybe rice or maybe some other thing. Okay. So asset is buying. So asset account debit to cash. Assets are nothing but furniture and computer. So the answer is, the entry is furniture account debit, computer account debit to cash account. Or you can simply write office equipments account debit. Some people will name that. Office equipments. Okay, or furniture and fittings. He don't want to mention only furniture. Maybe that is the choice of the accountant. He himself will name that account. Okay, so furniture account debit, computer account debit, 2000, 20,000 to cash 22,000. Total of these two is a compound entry. If you want to make a simple entry, what you can do? Furniture account debit 2,000 to cash account 2,000. That entry is over. Same day, another entry. Computer account debit 20,000 to cash account 20,000. Instead of writing 2 times, the transaction has happened in the same day and sharing a common credit and combining it and writing it. Okay. So asset what comes in asset account, debit what comes in asset account, credit what goes out. In this transaction, only one account is getting affected. Both items are falling under same account called asset account. Your furniture is also asset, computer is also asset, cash is also asset. So all are real account. According to real account, debit what comes in, credit what goes out. Okay. Then sixth one, payment of postage, rupees 150. Postage is an expense. Postage is an expense. Expense is a nominal account. Nominal account says debit all expense and losses. What is expense here? Postage itself is an expense. So postage account debit to cash. If I pay cash to cash, if I pay through check or drop, it is to bank. Am I clear? Are you understanding up to this?
Yes, sir.
Yeah, slowly. Okay. Thank you. Next transaction. It's only an example. You can take anything. Sold goods for cash.
Sales account data to cash.
One second. Priya is raising a hand. Priya, yes. Priya, you would like to
Sorry,
say
sir,
something?
by mistake.
By
Sir,
mistake.
cash account data to sales account.
You are checking
Sir,
that it's
one
working
question.
or not. It is perfectly working. Yeah. Yes.
These all accounts are business or company accounts, right? What we are writing both on that. For an example, Manish is purchasing computer. So computer account is the vendor's account, right? So Manish is giving money to vendor and he is purchasing something and the goods are coming to his account.
Sir, goods are not coming. Computer is coming.
Yeah, means
What is the difference
computer
between goods and
asset
computer?
is coming. Yes, yes.
What is the difference between goods and computer? If you sell computer, then your company is to sell computer. Then if you buy computer, that computer is a goods. Suppose I am a rice vendor. Okay, wholesale rice vendor. I am buying a computer. That time computer is not a goods for me. Rice is goods for me. Computer is asset. I have to call that as computer only or office equipments. Suppose you are a computer vendor, hardware, you're having computer peripheral shop, you are vending computers. That time if you buy computer, that is becoming goods. You can write goods account debit or merchandise account debit or just purchase account debit. Depends upon the policy what your company follows. Okay, but it should not write computer account debit there. When I write computer account debit, I am not a computer vending company. I am doing some other business to facilitate my transactions, computerized transactions. I am buying a computer. So that becomes an asset for me. Fixed asset. Of course, it's a fixed asset. Goods are current assets. Goods are current assets. If it is not meant for sale, it becomes a fixed asset. That's what I told you, no? SOBA developers buying land is current asset. That's a goods for them. That's a merchandise for them. Dell computers buying a land, the land is a fixed asset for them. They will use it forever. That is why it becomes land account debit in HCL. It becomes goods account debit in SOBA developers. Got it?
Yes, sir. This is clear. That sorry, by mistake I said that one as goods. It should be asset. What I'm asking is like in this journal we are writing like debited from one account and credited to another account. So so where I am getting confused is like now there is one business. So these two accounts are of same business, or one is one
Same business,
account is
same
from
business, same business,
a
same business.
vendor and second is from ours.
No. It is about same business. Look at this entry. It is of same business. Now, the furniture vendor is not the owner of the furniture. You are buying the furniture from now onwards. That furniture is yours. That is why you are writing in your account. Furniture account debit, computer account debit, to cash account. All these three are your own account.
Okay.
Hereafter, that furniture is yours. Hereafter, that computer is yours. You will be labeling that. You will be giving some code for that furniture. Normally, in real life, what they will do, no, they will not write simply furniture, because furniture of 1,000 items will be there in a bigger companies. So what they will do, they will codify the asset. They will give a code. With that code, they will debit. Since it's an academics, we are writing just furniture account. If furniture account is 2,000, if asset, stock taking is taking place, that time, how do I check the furniture? 2 chairs will be there in MD room, 5 chairs will be there in manager room. There will be so many furnitures, so I cannot check. There will be confusion. So what they will do is they will give a code. They will give a symbol for each and every. You might have seen in colleges also. At the back side of the bench, they will be writing some alphanumeric numbers. That's a code. With that code, they will debit it. Furniture, within that bracket, that code will be there, debit. That means the name of the asset is being controlled. It is easy for us to control. So that is why it is our asset. It is Sumit business. Sumit furniture, Sumit computer, Sumit cash. Cash is reduced, asset is increased. In this accounting equation, what will happen? As one asset is decreasing, 2 assets are increasing. There is no change in the equation. That is why the equation remains always unaffected. So postage is over.
Sir, I have a question on postage.
Please.
So, what would be the dual entry on postage? So, this is in Sumit's account, postage account data to cash account. What will be in the postage account?
What will be in the postage account means?
The nominal account.
Nominal account, postage is an expense. Okay. Expense comes under nominal account. So I follow nominal account rule. Nominal account rule says debit all expense and losses. All means I have to write the name of that all. That all is nothing but here postage. So postage account debit. Then second one, what is affected in this transaction is cash. Cash comes under real account. Real account rule says credit what goes out. So cash goes out, so I'm crediting to cash. That is the logic behind. What is your question?
So my question is, in Sumit's account, I'm clear. So there should be another.
Where is Smith account comes here? Where is Smith account comes here?
Okay, on the top you have written in the books
in
of.
The books of. Look at the word in the books of.
Okay.
This book is the screen is of Smith. Smith accountant will make this entry in a book. That book belongs to Smith business. It is not Mr. Smith alone. I have written because it's sole trading concern. So I'm writing Mr. Smith. Actually, it should be Mrs. Smith Enterprises or Smith and Co. or Smith Brothers, like that.
Okay, all right, got
the
it.
Books of Smith business. Okay, business should have a name. That's why in assignment I told you name your business.
Okay, thank you.
Yeah, correct. So please understand one more thing. In Smith business, in his books of accounts of his business, his name will never appear except in one place for capital. You cannot debit Smith, you cannot credit Smith here and there. Okay, his account will never be disturbed. If his account is disturbed, that is through capital. Okay, he contributes, capital will increase. If he takes back any money from the business, his capital will decrease. Okay, next one. This is for sales. You are selling goods for cash. Eighth one. You are selling goods for
cash account data to sales account.
So cash comes in. Look at the eighth one. Sold goods for cash. Cash comes in. Goods goes out. Normally, cash account debit to goods account. But goods, we call it as nominal account as sales. Actually, goods is real account. But we consider it as a nominal because goods coming in, goods going out, confusion is there. So coming in goods, I call it as purchase. Going out goods, I call it as sales. So cash account debit to sales account. If it is not for cash, sold goods to Mr. Sunil, that time?
Sunil to sales.
Sorry?
Sunil to sales.
Exactly, Sunil to sales. If it is sold goods for Sunil for cash rupees 40,000.
I think we've the name of the person.
Cash to sales. Cash to sales.
For cash,
Cash
40,000.
to sales.
Cash to sales. That
Cash
time
to
Sunil is immaterial. You sell to anybody. If you receive money, don't worry about the person. You worry about what you receive because real account comes in the picture. Debit what comes in? Cash comes in. So cash account debit 40,000 to sales account 40,000. We ignore Sunil. Okay, again, sold goods to Mr. Sunil and received a check for rupees 40,000.
Bank account to sales.
Sold goods, once again, sold goods to Sunil by receiving a check of 40,000 rupees.
Bank account to sales.
Bank account to sales because bank amount is increasing. Bank is receiving a check. Some teacher will say check in hand account debit to Sunil, sales account. Then again, if you are depositing a check into bank, one more entry they will pass. But I don't want that. You just write whenever you receive a check, a prudent businessman, he will not keep the check in the office even for 1 hour. Immediately will send to bank for collection. So I write bank account debit to sales account. Whenever check received, bank account is debited. Whenever check paid, bank account is credited. Sold goods on credit to Manish, 10,000.
Manish to sales.
Money is to
But
sales.
it is on credit.
Money is to sales because it's a credit sales. Okay, even though that word is not there, credit is not there, you would write money is to sales. Sold goods to Manish for 10,000. That means credit sales. It's only academic arrangement. In real life, you will see what is the evidence for this transaction, what is the document for this transaction. Invoice will be there. Sold goods to Manish, invoice will be there. In the invoice, if stamp is fixed, cash received, then that becomes a cash sales. If that stamp is not there, that becomes a credit sales. Accordingly, the accountant will record. Okay. Paid to Morgan, 19,500. Discount allowed by him, 500. What's happening here? We already bought goods from Morgan. Is it so? Yeah. 3rd January, we bought goods from Morgan for 20,000. Now we are settling that. We are
Sumit
paying to
account
Morgan.
debtor to discount account.
One second. We are paying to Morgan 19,500 instead of 20,000. So money goes out.
500 will be a discount.
Morgan receives it.
Yeah,
Morgan is a person. Personal account rule says debit the receiver. Debit the receiver. So Morgan account debit. Look at this. First one, Morgan account debit. We are paying only 19,500, but we are debiting him 20,000. Why? He is telling, sir, 19,500 is enough to settle the account of 20,000. You need not give me another 500. If he says that, that becomes discount allowed for him. For us, it is discount received. Don't think that discount received means you are receiving 500 rupees. No, you are not receiving any money. Actually, you are not receiving any money. Actually, instead of receiving money, you are not paying the money what is to be paid. That is what we call it as discount. So Morgan account debit 20,000. Morgan account debit 20,000 to cash account 19,500. Why 19,500? Cash goes out. Morgan receives. Though Morgan receives only 20,000, you are right. 19,500. You are writing 20,000 because he is ready to forego 500 rupees. For that purpose, we are writing 20,000. So Morgan account debit 20 to cash account 19,500 to discount account 500. Okay. Then goods sold to Mr. Roy and Co. Mrs. Roy and Co. So Roy and Co account debit to sales. There is no new transaction in this. Already we have discussed in the Morgan itself. Then check received from Manish in full settlement. For Manish, we already sold goods. Look at this, 9th June, 9th January. Manish, we sold goods for 10,000. Now we are receiving check from Manish. Check we are receiving for 9,750 and we are telling him that is enough. You no need of giving 250. Why this is happening? Anybody can tell why we are allowing him not to give 250?
Because within the previous year we
Yes.
need money, so we are doing this one.
Why this kind of concession arises? Yearly settlement. Manish might have told, sir, 3 months time you give me, I will give you 10,000. But he is coming within 1.5 months and he is giving the money. For that, we appreciate his yearly settlement and we are giving him some concession. That is called cash discount. At the time of settlement, if any concession is given or received, that discount, that concession is called as cash discount. Okay. So bank account debit, since we are receiving that check, 9,750, discount allowed account debit. Discount allowed, or simply you can write discount account debit 250 to Manish account 10,000.
Sir, a quick question here. It's a bit confusing. So so from first transaction here, from Manish's account, the money is reduced, and in the bank and discount account, the money is credited here, right?
Money is
credited.
Money is credited, yeah.
Why we are writing to Manish account? Because when
Manish has given the money to you.
Yeah, through check.
Credit the giver. Manish is a person. Personal account is affected. Personal account rule says credit the giver. Who is the giver? Manish is the giver. So I am crediting Manish to Manish account.
I mean, something like when we say to Manish, so it is like we are giving to Manish something.
No. See. Don't bring that English here. Bank account and discount account is debited to Manish account. Because of these two reasons, Manish account is settled, credited.
Okay.
We are not giving to Manish. We are receiving from Manish, actually. This two is not about your paid to Manish. It's not paid to Manish. Credited to Manish. Already Manish account was debited. Look at this previous transaction. Manish account was debited. Look at this 9th January. Manish account was debited with 10,000 rupees. Meaning, Manish has promised us, I'll give you 10,000 rupees for the goods what he bought on 9th January. Now he is coming to you and giving you the money. Okay. Not paid to Manish, it is credited to Manish. Whenever you receive money, you just credit the person from whom you are receiving the money. Confusing?
Yes, still a bit confusing.
It should. Slowly.
Can you
One more question. I have given you one PDF file now. That PDF file you go through. Journal. One PDF file uploaded in LMS. That slowly you go through for 15 minutes. One question. You'll get to know. Our rule says, you just forget about everything. The rule says, credit the giver. See, or you can debit also. Money is you can debit. When you will debit money is just all the rules you just take opposite. That time also accounts will perfectly work. The rule I told you, debit the receiver, credit the giver. All the three rules you take the ulta. That time
that's
also
what is happening, sir.
What is happening here? Manish is giving money. We want to know how much money is to give us on a particular day. How do you calculate? Forget about all this. I'll come to this. You just forget about accounts. You just take a normal situation. Normal situation. Suppose there is a transaction between you and me. Okay? You are giving me money. You are giving me money. Suppose you are giving me 1 lakh rupee. 1 lakh rupee. Okay. Something like this. 1 lakh rupee you are giving to me. I have been paying you in different point in time some money for settling this particular transaction. Okay.
Okay.
For example, 1/2/2020, I paid you some 20,000. Like this, different point in time, I am paying you some money. Okay. Now, why do you maintain this? Why do you maintain these calculations?
So that we should get to know
this calculation.
So that we should get to know that
Why do you
we are
maintain this?
receiving total
We
money
should
or
get to
not.
know whether
like-
the money is settled or not, or
Yeah. The giver
whether
and
this
taker is
person
equal.
has to give how much money on this particular day. So this one column is what you gave, another column is what you
Received.
Received.
Okay, what you received. Okay. Instead of doing like this, we are doing in a statement form. I mean the journal form. This is paid. This is received. The same thing is being recorded in ledger. Whenever this transaction is happening, say for example 1/1/2019 cash paid, remaining all is cash received. Okay. Instead of doing like this, because it's very difficult to maintain separate book for each and every individual. You write my name here. Instead of doing that, every day only me will not come. Many people will come and transact with you. So journal is a place to record all those transactions. So I'm just keep on writing it. Finally, what I do, I take this. Exactly what I have written here will be called as ledger. I will prepare a ledger by the name of Manish, how much value I have given to him and how much value I have received from him. Then what is the difference between these two? If these two are tallying with each other, then there is no further financial relationship between me and Manish. If there is mismatch, then there is a financial relationship. If the third column, if this column is more than the second column, that means I have to pay for him the balance. If this column is more than the third column, second column is more than third column, then I have to receive from him. That's the meaning. For the same thing, we are doing in a accounting format. So whenever you receive money, you are writing in this one column. No? For that, we are taking a journal in this particular
format.
That's all. There is a journal. Journal is gone.
Yeah.
Yeah, there is another transaction. You will come to know over a period of time. It is not immediately, but you understand that rule means it is very simple. Okay. The last one, 31st March, 31st January.
Sir, we got most of it because of just English,
it's confusing.
Yes. That general usage of English and the way in which we are writing here, that will get confused. You have to get used to this accounting English.
It is like on 31st January, electricity and rent.
Payment of electricity and rent by check.
Yeah.
Payment of electricity and
check.
Yeah, by check. Rent and electricity paid. Since it is expense, expense is a
bank
nominal account. So nominal account says debit all expense and losses.
Yeah.
So I'm debiting the expense of concerned expense. Electricity expense account debit, rent account debit to bank account because it is paid through check. I'm writing to bank account. See the name of the account, especially nominal account, it is purely depending upon the accountant to decide. Okay. All right. The remaining you practice, this transaction you practice. Gopinath commenced business with cash rupees 50,000. The entry will be. Hello.
Hello, sir.
Yeah, are you there? Entry will be
cash account.
Gopinath account debtor to capital account.
Gopinath account
Debtor
capital account.
to capital account.
To capital account. Why?
Sir, because starting the business. Sir.
Just now I told you
Cash
the name of
account
owner will never appear in the books of the account except for capital.
Cash account to open.
Cash comes in. First of all, cash comes into the business. You think from the business perspective.
Okay, sir.
Business
Cash
receives
account
cash.
details to capital account.
Cash account to capital account.
Cash to capital. Cash to
Capital.
capital.
Cash to capital.
Yeah.
Cash to
Paid
capital.
into bank. Bank to cash.
Bank account data.
Bank account to
Bank
cash.
account details to cash account.
Bought goods for cash. Purchase to cash.
Purchase account
Purchase
details to cash
account to
account.
cash account.
Bought office furniture for cash.
Furniture to
Furniture
cash.
account details to
Furniture
cash
account to
account.
cash
Office
account.
furniture account debit to cash. Sold goods for cash.
Cash to
Cash
sales.
Cash to
Account
sales.
details to sales account.
Sales.
Cash
Okay,
account
good.
data to sales.
Sold goods to Manoj on credit.
Manoj account to
Manoj
sales
account
Manoj
data
account
to
details
sales.
to
Debit
cash
to sales.
Sales account.
sale account.
Bought goods from Narayan on credit.
Purchase account to
Purchase
credit.
account to
To
Narayan account.
Narayan account.
Sales account to
Narayan account.
Narayan account.
Narayan account. No cash. Paid rent to landlord rupees 3,000.
Rent account details to
Rent
cash
account
account.
to landlord account.
Wrong.
Rent account
to
debit.
Bank
cash
account
account.
data.
Landlord.
Bank or cash.
Don't think that
Paid is
cash
cash,
is not
cash.
there. Paid rent,
Yeah.
that's all. Cash is there.
Cash account to the landlord account.
Rent to
Rent
No,
cash.
rent
Account
to
data
No,
to
no.
cash
Rent
account.
account
Cash
debit.
account.
bank
Rule is
account debit to cash.
rent is expense, debit all expense. So rent is debited. To what goes out? What is going out? Cash goes out.
Cash. Cash.
Suppose
Cash
landlord
account.
is receiving. We are ignoring landlord because he is not receiving for repayment. He is receiving for settlement of using his building. If you pay to Mr. Kamal 3,000, then you write Kamal account debit to cash account. If you pay to Kamal for rent, then Kamal is not important. For which you are paying, that is important. Okay. Paid salary to manager.
Manager
Salary
account
account
details
data to
Cash
cash.
account.
If you debit
Salary to cash.
manager, then manager will resign that day only and
Salary
go
to
out.
cash.
to.
Salary
Okay, if you
account
debit
data to
manager,
cash.
what is
to
happening?
cash.
You are asking him to pay 1,000
Salary
rupees.
to cash.
If you debit manager, that means manager is going to give you 1,000 rupees later. But it is not so. It is for salary. Salary account debit to
Cash account.
cash
Cash
account.
account.
Cash.
Cash.
Received commission from Suresh.
Commission account.
Two second
Cash
to
account.
Cash account to
No.
commission account.
Oh no.
2 second. 2
Yeah,
second.
you are right. Cash account to commission.
Cash
is right.
account to commission.
You are
Cash to
receiving commission.
Commission.
Is an income to the business. But you are receiving from Suresh. Suresh is not matter. You rendered some service to Suresh. For that, Suresh is paying you 2,000 rupees in the name of commission. So commission is a nominal account. Nominal account rule says credit all income. Commission is an income here. See, commission can be expense also. If you pay commission, that is expense. If you receive commission, that is income. So the entry will be cash account debit 2,000, commission received account 2,000. Okay, next sold goods to Shreya.
Cash to sales.
Shreya account data to sales.
Shreya account to sales.
Sales account.
Shreya to sales. Bought goods from Ramesh.
Purchase account to Ramesh.
Purchase
to
account
Ramesh.
details to cash account.
purchase account to
Purchase to
Ramesh.
Ramesh. Sold goods to Rajesh for cash.
Rajesh account
Purchase
details.
account to Kamal account.
Rajesh to
Sales account.
To cash.
Sales account to cash.
To sales.
Rajesh
Sales account to
Cash to
cash.
sales.
Cash account data
cash
to
to
sales.
sales. Rajesh is
Cash
immaterial.
to sales.
Immaterial. Yeah. Sold goods.
Rajesh is not important for us because he has
Cash
paid
to
us.
sales.
Sir,
Cash
it's
to
bought
sales.
goods from sir.
Sales account to
Sales to cash.
yeah. Sales to cash. Sales.
Paid postage.
Postage to
Postage
cash.
to cash.
Postage to cash or bank
Cash.
Excellent. Excellent. Withdrew cash from office for personal use of rupees 2,000.
Drawings
Drawings
to
to
cash.
cash.
Draw.
Yeah,
Draw to
drawings to
account to
cash. He is taking
Cash.
for his
Drawings to
personal
cash.
use.
drawing to
Any
cash.
goods or any cash taken from the business for the personal use of the owner, then it should be recorded in the name of drawings.
Drawings to cash.
Yeah, don't
Sir, could you
confuse the
please
word drawings
explain?
of drawing from bank and drawing of
Sir,
business.
if he was withdrawing the money for the office use, what will be the entry, sir?
Yeah, if it is cash draw, sorry, what's the question?
If he was drawing for the office use, then what will be the entry, sir?
Where he is drawing from?
Bank.
Business.
Huh?
Bank.
Bank,
Talking about
sir.
the last one, sir. Last one.
Then bank to
personal use
bank
for
to
the
cash. Sorry, cash to bank.
Okay, sir.
If the business draws a check and gets money from the bank for the business purpose, that time your bank
Cash.
account is reduced, cash account is increased. So cash account debit to bank account. Just opposite entry for the deposit into bank.
Yeah.
Got it?
Okay, sir.
Cash
Okay.
account to account, bank account. Yeah.
Like
Sir,
this,
this
when you are there, yeah, sir.
differentiating between cash and bank when we are saying, so it's as normally goes, like when we say cash, it's a hard cash which is present with us.
Yeah. In this context, so far or in this journal entry, what we are discussing, cash refers to the hard cash. It does not even include check. Only the hard paper currency.
Okay.
Yeah.
So
But
whenever there's a
when
check,
we go to the
bank
next
involves,
concept, next, I mean, management accounting, or how do we analyze, that time we merge it together. Cash as well as bank put together, we'll call as cash, because anytime you can draw money from the bank. So we merge it together, that time we'll call it as bank and cash balances. But here, to have a difference, how much amount is there in my cash box and how much is there to the bank account, I have a different account. Okay. Okay. There are so many other transactions. You can practice that little later. Now I come to the next aspect. We are already
Okay, sir.
running short of time. Actually, this unit might have been done in the last session itself. Ledger. So far, what we have done is we have just recorded the transactions. We have just recorded the transactions whenever it is taking place. Whenever it is taking place, we are not in a position to tell the net effect of the particular transaction. Suppose I am asking you, what is the total rent you paid? From journal, you cannot just immediately say. You have to go on searching. Wherever rent is there, you have to add and you have to tell that this much rent we paid in total. For that purpose, the classification purpose and summarizing purpose, we prepare a book, we prepare a record called ledger. Ledger is a register having a number of pages consecutively numbered to maintain the ledger accounts. A ledger account is one which summarizes the same account happened in the different point in time. I told you, rent would have been paid in different point in time. I'm just summarizing it in a place. That place is called ledger account. Purchases might have taken place in 20 times in a year. All the purchase put together, I bring it in one place. That place is called ledger. Look at this. This is the format of ledger. Name of the account. Suppose rent account means I will write rent account. It has two sides. One is debit side and one is credit side. Both the sides are having the same details. Date, particulars, journal folio number. JF means journal folio number, then amount. Journal folio number means in which page this particular account has recorded in journal. That number will come here. In academic, we don't want to write anything on journal folio number. You leave it blank. Date you write, particulars you write, amount you write. Okay. Only one amount column is also enough. Why two amount column I written is some plus minus is there. You can do it one column and you can bring it to outer column. Otherwise, one column is enough. How do we prepare ledger? How do we prepare ledger? Just one example, I take it here. Date, particulars, amount, date, particulars, amount.
Sir, could you please
you
request
just
others to go on mute?
Sorry? Yeah. Yes. The people who are talking, please mute. Some people are immediately talking here.
Pradeep, please go on mute, please.
Hello, Pradeep, you there? Please
I
unmute
think
yourself.
Pradeep is traveling.
We are trying to prepare a ledger for an account called cash account. Before that, you understand how many accounts are there in journal. That many account you have to prepare in ledger. Look at this journal. One journal we can take. To take the small journal. Look at this. This company, Sumit's company, has how many transactions? One.
Sir, can you mute everyone, sir?
I have already done it. Somebody unmute. I'll do that again.
Okay, sir, you can proceed.
Okay, done. I think he himself muted. All right. So look at this. How do we prepare ledger? Ledger format is there. I have taken. Now, how many ledger account I have to prepare is depending upon the transactions. Look at this. First question I'm taking. Sumit's company. January 1st, there is one transaction. In this transaction, cash account is affected and Sumit's capital account is affected. Okay. These two accounts are
Hello, Pradeep Kumar. Pradeep Singh Dio.
Who is that?
Oh, it was Pradeep Singh, sir. He's very.
Pradeep Singh.
Yeah.
Pradeep Singh can be.
He's on mute now. You can go proceed now, sir.
Huh?
He's on mute now. You can go ahead.
Okay. Okay. So now we have to just see how many accounts are there. Now cash account is one. Smith account is second one. Then bank account. Again cash comes, but already we have a cash account. Okay. How many accounts are individually there? That many I have to take. Are you able to understand? How many accounts are repetitive? You can take only one time because one account you are preparing. Cash account is one. Cash account is one. Then Sumit account is one. Here bank account is another one. Bank account. Then purchase account, Mohan account. Then furniture, computer, cash already we counted. Okay. Then postage, cash we already taken. That's all. Okay. Manish, it's going on like this. So how many accounts are there? I have to count. I count literally again. Bank is 1, rent is 2, electricity is 3, monies is 4, discount 5, bank already counted. So no need of counting again. So 5, discount is 5. Before that, Roy 6, sales 7, discount 8, cash, Mohan, like that I have to take all the accounts. How many are there? That many I have to take. Now, for example, cash is repeating so many times. So I will take cash account to tell you an example. Okay. But actually speaking, all the account to be prepared. Okay. Now I take only cash account. I'll demonstrate you how we can prepare cash account. Okay. Cash account. Instead of going there and coming here, I take here only some example. Okay. Here only some example. Cash account debit to cash account debit to suppose capital account. Capital account. If this is the entry, how do I make cash account? Look at this. Cash is debited. Cash account is in debit side and capital is in credit side. Now this side is debit. This side is credit. You already seen the format now. Look at this. This all debit. This side all credit. Okay, let me do here only. Now date 1/1/2020. If the transaction is of that date 1/1/2020. Then what is the entry here? Cash account debit to capital account. I am preparing cash account. Am I right? I am preparing cash account. So in cash account, I have to go to debit side. I have to go to debit side and I have to write
by capital to capital
account. account. How much it is? Suppose if it is 1 lakh, I write 1 lakh here. Okay. I write 1 lakh. Okay. Suppose next entry, if cash is in credit side, if cash is in credit side, that time I have to write it here. Say for example, bank account debit to cash. If journal entry is bank account debit to cash means
By bank.
cash account is in credit side. So I have to go to credit side. I have to write by bank account. By bank account. How much is the amount? I have to write the amount. Say for example, 5,000. Okay. This is how I have to prepare ledger. I once again tell you, you just go to the journal for which you have to prepare a ledger. Count how many individual accounts are there. How many accounts are there? Open that many ledger accounts. Open that many ledger accounts. Okay. Look at this. This is first entry. Cash account debit to Smith account. I am preparing cash account. So I want to go to cash account of ledger. Since it is in debit side, I am just going to the debit side of cash account and I am typing to Sumit capital account for which this account is debited. I type that. This 1 lakh rupee. Okay. Suppose this one. This is the second entry. Cash account is in credit side. Look at this. It is in credit side. If that is the case, I have to go to credit side of the ledger of cash account and write by bank account how much? 60,000. In this, no cash affected. I ignore this. I ignore this to prepare the cash account. Here cash account is there. Look at this. Here cash account is there. Cash account is in the credit side. So what I do? I go to credit side of the cash account. I write these two. Buy furniture 2,000.
By computer 20,000.
Like that, I will do up to end of the day, end of all the transactions. Then finally, what I have to do? I have to take the total of debit and total of credit side. Total of debit and total of credit side. It will not tally. It will not be matching with each other because there will be a balance. Okay.
Profit and loss.
Just take like this. There will be balance. Look at this. Assume there is only 2 transactions. This side is 1 lakh and this side is only 5,000. I have to write the total of higher value on both sides. The total of higher value on both sides. Total of higher value on both the side. Okay, 1 lakh, both the side. Now it is mathematically it's wrong. 1 lakh is here, I written, but it is wrong. It is not 1 lakh. So the difference, I am writing it here. The difference.
By profit and loss account.
Huh? What is that?
Balance
Profit and
carried
loss
out.
account. What is the logic for that profit and loss account? Why you are taking the cash into profit and loss account? Cash is an asset. So it's a balance. On this day, suppose this is 31/12/2000.
Balance carried down.
31/1/2020. On that day, you are balancing it. 31/12/2000 and 31/1/2020. Meaning is this much of money. Once again, 1 lakh is capital. This much of money is right now there with you. Closing balance of cash. This is the closing balance of the cash in the business. This money is the closing balance. This will go to trial balance. Okay. Ledger account, if it is matching with the debit and credit, that ledger account is said to be closed. Suppose we take the example of Manish. Manish's account was debited with 10,000. Okay, 2 sales. If it is Manish's account, it is 2 sales 10,000. Okay, Manish bought from us for 10,000. 10,000. Okay, and Manish given money in the name of check 9,750, and also Manish has received a discount from us, discount account of 250. 250. So that time the account is closed 10,000, 10,000 each. It won't come to trial balance. This account is closed. Meaning is, he is not having any due from us, or we are not having any due to him. 10,000, 10,000. This will not go for anywhere. There is no balance in this account. Both sides are equal. Okay, this is how you have to prepare ledger. If any account has a balance, that will go to trial balance. Look at this trial balance. Suppose in our example, cash account, how much was the balance there? 95,000 was the balance. Which side it was? Which side it was?
Credit side.
Credit
Yeah.
side, sir.
Here it was there. No, look at this. Here it was 95,000. It is credit side is less. If you write the balance here, what is the meaning? 1 lakh is debit side, 5,000 was in credit side. So the difference is 95,000. What is the meaning of the difference? Debit
That
is
is
in
in
excess of
credit.
credit. Am I right? Debit is in excess of credit. So I would write it in debit side 95,000. If the balance CD is in credit side, you would write it in debit side of the trial balance 95,000. Why I am writing opposite? It is very simple. Actually speaking, the cash balance in the debit side is 1 lakh, credit side is 5,000. I am talking about the one what I deleted. Okay, cash balance was 1 lakh, the credit side is 5,000. The difference is 95,000. That 95,000 really meaning, mathematically it is in credit side, but really meaning debit side is more than credit side. So I'm writing a debit balance here 95,000. Likewise, bank account. I have to prepare a bank account and I have to write the balance. Always cash will be debit balance. Bank will have also debit balance. If bank account is having a credit balance, meaning is you taken more money from the bank than the deposits. Okay. Likewise, you have to name all the account one by one, which are all having the balance. Finally, this total will be equal to each other. That is what we call it as trial balance. In the next class, for first 15 minutes, we will take one particular journal from this given answer in this question in the PPT, and we will prepare 2-3 ledger accounts, and we will prepare one trial balance. That will make you more clear in preparation of ledger and trial balance. My advice to all of you is, you have to take some 20-30 transactions and you have to practice how the journal is prepared. For that, don't go here and there. I have already uploaded in your LMS a PDF file in the name called journal. Open that file and practice the different transactions given there. Okay. Accounting equation is only for our understanding how the overall accounting works. Nobody will prepare accounting equation in the business, some documents. That is coming under only in the balance sheet lost. Okay. All right, that's what I wanted to tell you in this class. Anything else before we wind up? You can ask. By the time I will take some questions in the chat box also. Initially, I missed some questions. Very initially, purposefully. Because of the continuity, I missed some question. I just take it.
Sir, so the document what you mentioned, journal, which is uploaded in LMS. So other than that, if like people who needs to start from the basic, because
everything is there in LMS. Everything is there.
So like I need to understand the concept as well. So do you recommend anything like other
Nothing.
than?
I don't recommend anything except your LMS.
Okay. Okay.
I don't recommend anything except your LMS. In LMS, under Unit 1, whatever is there, if you read, that is sufficient enough. After reading that, if you have any doubt, you ask me. And if you want to go further, that time you tell me, then I'll tell you some of the other books.
Okay.
Clear to you?
Yeah.
Yeah, because don't refer here and there so many things, because you have to concentrate. Everywhere you go, same thing will be there. But in different words or different language, they will give you, that's all. But basic is remain the same. So you please go through the LMS. I have taken the book. and I have taken sufficient time in arranging that, and I put it there. Please make use of that.
Sir,
Yes,
one
I
question.
saw that document. So there are a lot of questions which are good for practicing. So, but
No, madam. I think you are very much. You are talking about history. That is 2-3 days ago. Yesterday only I have cleaned it everything. I kept little bit updated one.
yes,
Yesterday,
sir. I'm referring in the currently only. So I'm asking like how to verify those questions. Like there is no answer.
No questions. Where is the question? Questions are there in LMS?
Yeah, under journal you said no. Under journal.
In journal document, is there any question?
Yes, sir. There are.
That question you can just interact with me. You can answer that question by, if you read that material PDF file, first 3-4 pages, you should be sufficient enough to answer that question what is there. If you want to check that, you can send a mail to me by answering that question. I will give a reply, or in the next class you can raise it. We can do that, but that is not a practicing question for you. Okay, practicing question answer is there in the PPT only. Their illustration is there now in the PDF file. Examples are there, solved examples that you need to go through and you have to understand. If you understand that properly, then exercise question you are able to do it. If you are not able to do, ask me.
Okay, sure. Thank you, sir.
Yeah.
Sir, will we be having questions like, doing large accounting transactions, like doing preparing a final accounts or something, or it will be more of a theory?
No. We are going to prepare everything. Now we have done
For our
internal
exams.
purpose, internal data processing we have done. In the next class onwards, what we are really seeing in the newspaper about the company's financial statement, that we are going to prepare.
Okay.
Yeah, it's not just like theory. We are going to prepare the financial statement.
Sir,
So,
the question I have is, in our exam.
Exam also.
Okay.
See, do you think that we are spending 6 hours or something like that for not writing anything in exam? We are going to write exam with some practical, practice of question. I will give you transaction, you have to make a journal, or I will give you some items, you have to make a trial balance, or I will give you trial balance, based on that you have to make a final account. Final account means P&L account and the balance sheet. Definitely in the exam, I don't have any other question to be asked now. For 20 mark, which question I can ask? A bigger question is like a business, not starting from the end. Any one stage I will ask you. Especially preparation of financial statements. That means profit and loss account and the balance sheet. That too we are going to prepare in the class. Same thing is going to come for your exam. Okay. Got it, sir?
Sir,
Hello? Are you getting it? Am I
Yes, sir.
audible?
Thank you, sir.
Yes, sir.
Yes, sir. We can hear you.
Yeah. Anything else?
Sir, regarding the assignment, like
Regarding the assignment, the given assignment is for 10 mark. We can keep it for 10 mark. First activity. Okay. So what you do is, there is a document in your LMS. Download that. Read that carefully. The last column is the output. Activity. Then there is a activity required to be done. That required to be done is your real document. What you have to produce and submit it to me in LMS.
no, sir, the previous one in which we have to write the equations, and also in that whatever we are mentioning like cash, and also accordingly we have to mention the equations, or we have to set some value to that particular
value. You have to write some value. Okay. If you are able to see this, I'll show you one example. I'll show you. If you are okay for another 5 minutes, I'll show you one example.
Yes, sir. Please go ahead, sir.
Yeah. I'll open that assignment.
Actually, we have trying finding difficult to do that assignment, sir.
That assignment is difficult.
Yes, sir.
Yeah,
make it easy.
I can show an example of what I have done for the benefit of people if they are interested.
Yeah, that's also fine. That sounds good. Yeah, if you can share, you tell me your name.
Yeah, this is Vijay
I'll
here.
make you as a presenter. You can show the document on your screen.
This is Vijay here, Vijay PR.
Vijay. I'll make you a presenter. It's right. Vijay PR, right?
That is correct, sir.
Yeah. Make a host. Yeah. I think you should be able to press. Show your screen now. Are you?
Yeah, let me know if you are able to see.
Yeah, now you can see.
So each of those rows that Sarah has given. Yeah, yeah.
I'm not able to see.
Are you able to see, sir?
Yes.
We
So
can see
each
now.
of the activity. So this is the
So first
activity.
one is
Just to give a context.
Identify. Once again, activity is identify or start a business, trading or service or manufacturing. What for that? What you have given? Suresh decides to start a small firm to manufacture fuel sensors for the automotive industry. Okay, fine. Yeah.
Then we have to decide the next one is the form of ownership. So to keep it simple, since it's the first assignment, I am taking it as a
small entity. Suresh registers himself as the sole owner proprietor. Where he is registering?
Yeah, I think there is some government this thing, right? So
I want to know that some only is the answer.
Okay.
Yeah, you have to go little. This is very much generic. Okay. You have to find where it should get registered.
Okay. Okay.
He decides to prescribe it as name of
this
business.
thing. Yeah.
Okay. Okay, right then.
Then this is a generic question. Describe the meaning of business transactions in 2 lines.
Business transaction in simple terms are defined as exchanges or interactions of monetary nature between 2 parties and recorded at least in 2 different documents. Any business transaction invariably involves aspects of give and take. Yeah, that's what we discussed here now. Benefit giving and benefit taking. Yeah.
Yeah. And then 3 examples for assets, liabilities, and equity. This I think we discussed.
Don't use the imperative again. From the question, you write the answer. The heading should be 3 examples for assets, liabilities, and equity. You are telling me to write 3 examples? No, right?
No.
I have told you to write. So
sure.
Change that wordings. Yeah.
Okay.
Okay. Excellent. One second. Asset and liability, we can see. Assets, cash in hand or bank account. Land owned by a business entity. Okay. Land is asset. That's no. You are talking about business only. Machine, plant, equipment. Taxes to be paid. Outstanding taxes. Okay. Salaries to be paid to employees. Interest to be paid on bank loan. You see, these are all very normal. Very basic or current liabilities. You don't have a major liability, no?
Sorry, what was
that? Some more important liabilities.
Okay,
bank loan can be a liability, no?
Yeah.
Interest to be paid on bank loan is a liability. I don't deny that, but
bank loan is major ones. Fair enough.
Equity, dividends on share is not equity.
Okay.
Equity means capital amount invested by the owner.
Yeah.
Undistributed profit. That's what our second thing is telling about.
Yeah. Correct.
First one is not equity.
Okay, sir.
Look for another one. Okay, next. Sure. Come. Yeah, like this. All of you, please follow this like this. Analyze activity 5. Analyzing. What is that? Analyzing the relationship between assets, liabilities, and equity. Writing down all accounting equations. Yes, come down. Yeah. A is equal to L plus C. Write it fully.
Yeah, since there were 3 formulas.
Right? Yeah. Okay. Fine. Thank you. All corporates. Okay, fine. That's good. Come down. Identify 10 different possible transactions. Yeah. Now we have to write the transactions. Transaction 1. Suresh starts a new business with a capital of 5 lakh. Okay. Cash in hand 5 lakh. Capital is 5 lakh. Okay. Liability. See, you are saying A, L, E. Where is E? Capital is L or capital is E? Capital is coming under. Okay, you have taken separately C. Fine. If that is the case, under liability you are writing capital.
Yeah.
No, right. You are having three letters. No, A, L, and C.
Correct.
But in the equation, only A and L is there. C is a part of L. You are telling.
Correct. Correct.
Which one? You are right. Your written is correct, or you have to correct it.
Should we include another column?
Yeah. Yeah. Equity column or capital column.
Okay.
Please, all of you remember equity and capital one and the same.
Okay.
Okay. Yeah, next. Suresh opens a bank account. Excellent. In ICICI Bank and deposit 4,50,000. He is very rich guy. Suresh is rich. He is depositing 4,50,000. All businessmen will loot money from the bank, but he is depositing 4,50,000. Think it up. Let him deposit only 5,000 or 50,000. ICICI Bank may demand 50,000 as a minimum balance in current account. But anyway, theoretical wise it is okay. Cash in hand 50,000, cash at bank 4,50,000, capital is 50 lakh. I mean 5 lakhs. Yes, sir. Thank you. So like this only you have to go with all the transactions. Come to the last one. Come to the last one.
Yeah.
Very good. Now describe the meaning of balance sheet. Yeah, this is okay, sir. That's okay. Come down. 10 transaction over. Now 9th activity is describing the meaning of balance sheet. Balance sheet can be defined as summary statement of all financial transactions undertaken by a business entity over a period of time, typically over a financial year. Okay. Next, preparing a balance sheet for the 10 transactions. Come down. Have you done the balance sheet? Capital. How? Capital has increased by 25,000. Okay. Outsiders. Don't write outsiders client, just creditors. Cash, bank, furniture, plant and machine, stock, debtors, car. All right. That's good. Like this only. But don't go only monotonous like only accounting concept. Take the the exact nature of that activity also. Just I told you, bank account depositing 4,50,000. Nothing stops you, but little business, what you can say, business idea also there.
Practical way.
Yeah. What really happens? So perfectly, this kind of work is appreciated, and all of you can even take this as a base to develop your own document, and we can develop it and send it. I mean, not send it to me. In LMS, you have to upload.
So in each of these, should we have a capital column separate, sir? Or
No. In balance sheet, no capital column separate.
No,
but in the equation, you should have a separate column.
Okay, sir.
But you've done all a transaction also in the form of balance sheet only.
Yeah. That's so because you wanted
not necessarily to be. In the class, you have done in a statement. I mean, in a sentence form.
Yeah. So that because you wanted how this thing is changing, right?
Yes.
So that's why I put it like that, so that it is easier to understand.
Nothing wrong. But equation means it should be in a plus b is equal to 3 in that format.
Okay. Yeah, I can include that, sir. No problem.
Others who are going to prepare separately, newly, you follow that way.
Okay, sure. Thank you.
Yeah. Anything else? Don't feel it is very tough. You can take a reference of this. He has done. Okay, and you can take any help from the people who already know in the accounting, or you can take the help of the teacher, that me or anybody else also for that matter, but you finish it. Don't feel that it is difficult. Start the work, it will get finished automatically.
Right now, there is only individual assignment, right? That second group is...
I believe in individual assignment only, but in the third assignment, I'll give you third activity. Don't worry. Third activity, I'll give you a group assignment, analyzing the content. Okay, where we'll bring the commerce as well as the non-commerce students together, and we will try to have an idea.
Okay,
so
sir. Thank
you. Learn from each other.
Sir, one last question. So it becomes difficult to follow in the class. So can you please tell what is going to be in the next class, so I prepare a bit? If you can just give a high level through the what is there in the course outline.
No, what is your point? I'm not getting you. First point is difficult to understand, that I got it. Second point?
No, can you please tell like what you are going to teach in the next class, so that
yes, next class we are going to do journalizing, preparing a ledger and preparing a trial balance.
Sir, is there any book?
Today we have done Preparation of
Okay.
journal. And we have done just meaning and example of trial balance and ledger. Next class, for 15-20 minutes, we are going to prepare trial balance and ledger. And then rest of the time, we are going to prepare profit and loss account and the balance sheet.
So chapter number 5 and 10, right, sir?
Sorry?
Chapter number 5 and 10, basically.
Chapter, we have only five modules, no?
What chapter? Please
We
don't
are
cut.
still in the first module only.
Okay. In the first
Second
module, there's
module is self-study. I will tell you what it is later. Third module, we are going to start in the next class. For the first half an hour, we are going to do with the first module only. That is preparation of ledger and preparation of trial balance. We use the word module in your course plan. I mean, in your course outline, modules are there. Totally 5 modules are there. They are still with the first module.
yes, sir. In the first module, there I found a PDFs. Okay, so PDF with the name ledger and trial balance. Those.
Yes.
Yeah, yeah. If I open that, says chapter 5 actually inside.
See, don't worry about that inside number.
Okay,
what
okay.
is given. Only
Okay,
go by
okay.
the name of the file. File name is our concern. Trial
So
balance.
next
Journal,
class,
ledger.
by next class, we have to go through this ledger and trial
You
balance.
please go through the trial balance and you go through the ledger. There are 2 files uploaded in your LMS under module 1. One is trial balance, another one is ledger. Go through that before coming to class. Now, after this class, please go through that file called journal.
Sorry?
Please go through the file called journal after this class. Just an extension of this class.
Yeah. Journal file.
Practice more questions on journal.
Okay, sir.
Which website is reliable for accounting examples? Because it's easier to understand accounting through examples.
Madam, you are not believing the teacher and your LMS. You are asking so many other external websites. Okay, do one thing. I am not having any website to be recommended. But
Sir, can I say?
if you have a stage about accounting.
Sir, can I say the website?
Sorry?
Can I say the website which I refer for accounting?
You can say to her later in the message, you can tell her, no problem.
Yeah.
But I recommend you only to go through that NCRT books, which I have just forwarded to you in the WhatsApp group, and other people also seen that and they are telling it is good. NCRT book, which chapter I just ticked in the green color, that you read.
Okay,
Don't feel bad that you are reading a lower standard textbook. Okay, it is giving all the concepts what we are having in the first module. You please go through that. That is more than enough for understanding the basic of your accounting.
Sir, first year PUC book is also okay, right? Accountancy.
That's what. NCRT is nothing but a first year PUC book. That's from the government. It's first year PUC of English medium book of any state government is also okay.
Yeah. Thank you, sir.
Madam, don't worry about website. Please go through this textbook. Yeah, please.
Sir, thank you.
Later you can get it from the gentleman the website. But websites will be confusing. There will be lot of terminologies, lot of things will be discussed there. You will get confused. That's what I'm telling.
Yes, true.
Please. Okay. All right. Thank you. We have extended so much of time. Next class we will discuss. In between, if you have any doubt, you can message me. And I request you don't bring so much of messages into that group, other items and all. Just make it a very formal group, and you can discuss only the accounting aspects over there. Okay.
Okay, sir. Thank
Thank
you.
you.
Thank you, sir.
See you.
Thank you, sir.
I'll wind up. Yes.
Thank you, sir.
Thank you very much, sir.
Thank you, sir.
Thank you very much,
Thank you
sir.
so much.
Thank you.
Thank you, sir.
Thanks, brother.